Okay, and we're live. Ron, happy Friday. Not so happy, but you get my point.
Happy, but not because of the market.
Happy, but not because of the market. Yes, exactly.
Yeah,
Um,
yeah.
yeah,
How are you?
I am miserable that I'm back in Canada. It sucks. I landed and it was rainy and it was foggy and it was like near freezing outside. And I was just like, okay, I came from 26 degrees in Argentina and sunny, beautiful weather, short sleeves. I walk out of the airport and it's just miserable here. And I was just like, dude, what am I doing here? What am I doing here? So, yeah,
Yeah,
we back, baby.
well, every place, I'll say this, every place that you live, there's places that are better than others for sure. Every place is going to have things that are just negatives that you don't really like. And every place will have positives that you'll love. Some have a lot more than others. But yeah, you can choose by fixating on those negatives to be miserable or focusing on the positive and being at least maybe not happy in Toronto, but decent. So,
Yeah.
but
Yeah.
beyond that, Tevis, yeah, we need to talk about this market situation. It is crazy out there. Now, before we do, this is the Ron and Travis show. Of course, that's not our real names, but this is a little bit more lighter weight. But we do want to focus on the market, especially with what's going on. A lot of people are feeling pretty uneasy right now. We are in extreme fear. I believe we hit 9 today. Let me
Did
pull that
we?
up actually. Yeah.
That's
I don't know
wild.
that we
Yeah, we're at
CNN
10.
Fear and Greed Index.
We're at
All
10,
right.
baby. It's on my homepage. There you go.
Oh, it's 10. Yeah. I thought I saw it at 9, but yeah, it feels
10
it
is
feels
still
like fear. Sometimes when we actually look at this and it's it's really extreme greed or extreme fear, it's like, it doesn't really feel like it.
yeah.
Uh, what about you guys in the audience? Like we're gonna go through macro stuff. We're gonna talk, by the way, today about three of the Mag Seven and which one maybe is the best bet. We may dabble into a little bit on the SoFi side as well, maybe BMNR as well, and then a lot of Q and A. This is gonna be a little bit longer episode. Steve is checking out a Lakers game, so we're not gonna be able to have the late show so. This is gonna be a little bit longer. Uh, Honestly, yeah, it's pretty rough. Yes, we can see the X messages stock.
Yes.
Yeah, like I'm out of cash now too. I've got like
Thank
a
you.
thousand
Thank you.
bucks or something. But the reality is, when you haven't seen any opportunities in the market at all, back in October, that was kind of the case. And then there's been a whole bunch since the beginning of the year. It's really easy unless you're really disciplined. And I've not been clearly enough to have spent too much too quickly. But it's also hard to know when this will reverse too. Um, Tevis, are you sitting on a big chunk of cash you're waiting to deploy, or where are you at in this?
Um, I deployed a big chunk of cash yesterday, but that's only because I got a bunch of shares put on me. And you know how I always say I'm in margin, I'm in margin? Yesterday I was actually in margin. Like I didn't have sufficient cash, and so I went into negative cash territory, and that spooked me out a little bit. So I just put the cash in the account, and now I am in basically a zero cash balance. I think I'm like minus 3K or something. Very manageable. But then I went ahead and I wrote some more puts. So if this doesn't turn around over the next month or so, I'm going to be in margin and I can't really save it unless I sell stuff. But at the same time, like I'm not really worried because it's like well below my maintenance. So I'm not going to get like margin called anytime soon. I would just have to pay the margin interest, which is like very manageable, I think, all things considered. And I was hold on, let me pull this up. So this is what I did yesterday. I I sold some SoFi $16 puts for May 15th. And I should have realistically waited a day because I only collected 150 and I would have collected like 250 if I just waited, a single day. But yeah, essentially, I am saying here that I don't think SoFi is going to be trading under $16 by May 15th. And if it is, then I have to pick up about whatever that is, 20 contracts times 100, 2,000 shares by that time. I don't think I did anything else. Yeah, I posted this today. I don't think I did any other trick. Oh yeah, I bought a whole bunch of smaller stuff and I closed some covered calls that I had. I actually wrote covered calls on Wednesday, and I was able to
Nice.
close them 2 days later for like
On
60%.
it was on air.
I wrote them on Air. I
Yeah,
wrote them on
nice.
Nebius. I wrote them on Amazon. I wrote them on Lemonade. I wrote them on
Okay.
Hood. Um, and so, but like all things considered, I think it collected like $1,000 or something. It wasn't like a big chunk. Um, I think the bigger deal right now is that I don't like. I need to figure out what I'm comfortable from a margin perspective over the next couple of months to determine what I want to write puts on, or if I just want to like buy Meta straight up on margin and just pay the fee on a monthly basis. Um, so yeah, exactly. Is there a 12-step program for selling puts? Because I would need to do that.
This guy finds the most degenerate way to actually be able to play the most conservative strategy a market. So,
Well, I mean, like, I don't know, man. So here's this thing, Roy. Like, I bought Meta so I was expecting volatility this year, and my portfolio is very heavy. Nebius, SoFi. Obviously, the portfolio is down this year. SoFi is down like 50% off their highs, and we're going to talk about that. I'm not really that concerned about it because the company is fine as a company. But the idea was, okay, I want to sell some of my more riskier stuff, and I want to keep a whole bunch of cash so that I can deploy that cash through puts. And now that cash is completely depleted. If you go back to my like monthly updates in December and in January, I was like 18% in cash because I was using it to wheel. And now I'm 0% in cash and like negative. And then the second part of the strategy was, okay, I realized that Meta and Amazon are very stable, solid companies. And then I want to use them as piggy bank positions so that when the market sells off, I can always have them. Well, guess what? Freaking Meta's trading like a shit coin over here, and I can't really do anything about that. So that strategy is sort of out the window. And I think it's a good opportunity. I don't know. You're like a little bit different on Meta for different reasons. We're going to talk about that. We're going to talk about SoFi as well, and I'm sure there's going to be a lot of Q&A in this show. So I'm really excited about it.
yeah. Let's talk broader market first, and then maybe we'll talk Meta next, and then SoFi after that as well. Um, well, I mean, if we're long-term investors, the opportunity hasn't changed long term. I'm not sure if we don't need the money, why would we sell? I do when I am looking at my portfolio and I'm like, I'm way overweight, way beyond my conviction on a name. And I do take profits, here and there. I wouldn't say that I didn't sell anything. I have sold some stuff, including a kidney. No, I'm just kidding. I mean, like I did see that. In times like this, people will reach out to basically anything. By the way, Good Vibes said, "Wait, what? You don't consider $1,000 in 2 days a chunk? When you're a billionaire like this guy, you don't.
I mean,
For most of us, $1,000 in 2 days, that's a lot of money. So,
no, I mean, relative to my other, like I just closed the batch of Nebius puts and I got paid like 14 grand for. So like relative to that, it's not like because I sold covered calls on a lot of positions, and so it's like $100 here, $200 there, whatever. Um, but yeah, Highland says if SoFi is $40 and BMNR is $50 in 2027, we just hodl. Yeah, I could see both of those prices in 2027 for sure.
yeah. Okay, so as far as what's happening in the broader market, let's start here first. And a couple of things. I'm going to do a video. There's a few things I need to think about and research, but probably Saturday night that'll review a little bit more than this. But if you could throw this up real quick. And by the way, Tevis was talking about margin before I forget. Margin is not right for everybody. I almost never dabble in margin. There is a point when I would use some, but that's only with known money that I for sure have coming in the market over the next few months. Tevis is a little bit more degen, and for some, like zero margin is the right place. So be careful with it. That's all I'm saying. And in times like this, it feels really good not to have margin. This is the S&P 500. And so, of course, it has been tanking. If you look, I mean, you don't have to be a TA genius to look at this and be like, wow, that's an ugly chart. It really is. Over the last 5 years, we can see where we've been. This, by the way, is RSI index, and we're on the daily interval here. I want to show daily first and then weekly a little bit as well. But anyway, over 70 for the relative strength index is considered overbought. And of course, in a bull market, things can tend to be overbought for a little bit longer than expected. In a bear market, we're not in a bear market. We are in correction territory on the NASDAQ. We're not there yet on the S&P 500, though we're not that far away. We are on that on pretty much every other index, though, in the United States. But in a bear market, which is negative 20% from the top down or more, you can see it last a little bit longer, and also for short-term events as well. This is, again, just the daily. We are very close. We're actually not quite there. Let me zoom back in a little bit more just so we can see where we're at. Actually, on the daily, we are. On the daily, you can see we're actually at 28 something. Now, the daily doesn't mean nearly as much as the weekly. And this doesn't mean, by the way, that we can't go lower. But you can see right there where we're at on the weekly. It's 35 and a half, actually. It's ugly. I'm not a TA guy, but man, it is ugly. The thing is, catalysts and the market do weigh out the RSI, but at some point, this is basically where we can look at possibly having a bounce. So this is going back to Liberation Day last year. It seems like Trump did his best to give us a bear market, and if we had closed out one of those days, we would actually technically be in one of the shortest bear markets ever, because it would have lasted about a minute. We're not anywhere close to that here, but you can see similar RSI trends, and we were oversold on the weekly standpoint just a little bit. Now, what I think is more encouraging is if we zoom way out, you can see the number of times that we've been deeply below on the weekly as far as the oversold. Doesn't tend to last very long. It doesn't mean we immediately rebound. This is, of course, COVID. We can see back here during the bear market. And again, bear market is when you can see this being oversold a little bit longer, touching nicely off the 30-day RS or the weekly RSI from being oversold. Briefly under here for Liberation Day, and of course it rocketed back. Had, of course, Taco not happened, then maybe we would have seen a little bit more downward pressure. This doesn't mean, by the way, if we touch 30 that we're instantly going back to all-time highs, but it does mean usually you'll see a technical bounce and at least a relief rally. Algos know this, people know this, individuals know this. And if you wonder why this happens, there's several reasons why, but the biggest is at this point, it's basically a self-fulfilling prophecy. But again, if Iran turns into a quagmire, we're stuck for a long time. You could see this, of course, have a relief rally at some point, but continue to bleed or consolidate and grind just a little bit lower as well. Like even at some of the most awful times, this is 2008, and it was terrible. I mean, look at where the RSI got to. It was awful, but it didn't really last that long. And of course, the trend was intact too. So all I'm saying is this right now in times like this actually matters a whole lot more. VIX is actually over 30. Corrections happen most years. Midterm elections here, going into midterms, also happens this way. What feels the most painful, at least for me, and let me close this out, is it feels like it didn't have to happen to us. Now, there were issues and concerns. There always are in a bull market, like with AI, with SaaS, and so forth. But a lot of this revolves around the Iran war, the Iran conflict, which I hope won't turn into a quagmire. People, I think, were thinking it would last maybe as long as the Venezuela thing, but that's not the case. It's a lot more complex, a lot more painful. And I hope that we see the end of that in the next couple of weeks, but I don't know.
Yeah, I put this post up that you posted on climbing the wall of worry because I really resonated with it. I reposted it. And I just think that every single one of these dips, if you've been in the market for, since in the last decade, it seemed as though, and even the 2018 dip, that was horrible. Powell, I think we got a raising of rates. And all of those have seemed as though they're super much more drastic than they actually are. And it's very, I get this from new investors all the time. Like I was talking to my cousin earlier today, and he's like, 5K is his entire portfolio. He's just in the game, fresh. He started investing. He's like, dude, what is going on? And it seems because like all the news you consume is doom and gloom FUD, and as a
Yeah.
result, all these dips that are barely recognizable on this multi-year chart, they seem like the end of the world, right? But the overall trend is your friend on the long term, and they do get resolved. And it's sort of like those new investors who are like, oh, well, 2008 was the best buying opportunity. I would have just bought stocks at pennies on the dollar. And it's like, dude, you weren't around during that time. And if you were, you would have known that like the morale, the sentiment was rock bottom. And even though the prices were so drastically low, people thought that they were going to go lower every day. And so it's very similar, now in some degrees as it was in every single other dip that we saw, whether it was COVID or the yen carry trade or 2018 or Liberation Day. All of these have brought with them their own sense of worry, their own sense of uncertainty and doubt. And overall, they've all proven to be good buying opportunities. And I know if we're comparing the chart from October and now, it looks horrible. But if we compare the chart for the last 3 years, you're doing pretty well, all things considered, right? Especially buying quality companies. So somebody in the chat asked, and we'll bring it up. Is there any words of comfort for somebody holding a large percentage of SoFi? It's like, well, dude, like if you've been holding SoFi and it's at 15 right now, it really sucks if you bought it at 32, but it's still fine if you bought it at 6, as we were buying, a year or 2 years ago. Like at the end of the day, you have to resort to looking at the fundamentals because everything in the news and around you is going to be looking at the macro. And there's a very short term memory in the macro, and they resort to fear because that's what gets clicks, that's what gets views. But if you rely on the actual fundamentals of these companies, and you'll see that they're executing. I mean, Meta, they expanded like their capex on one of the facilities from like 1 billion and change to 10 billion, and Marco was like, "Uh-oh, time to sell off Meta." It's like, dude, like they're going to be investing that money with the presumption that they're going to have an ROI on that investment. Like otherwise, why would they make it? At least, and some don't work out, like the Reality Labs and whatnot. Like they prove to be very costly projects that don't yield a result. But at the end of the day, I would rather a company take bets to continue to grow faster as opposed to pulling an Apple, just buying back shares and doing nothing. So, anyways, that's me off my soapbox. Also, we're back to these. So I don't know, Roy, what you're drinking today, sir, but we're trying to keep a dying brand alive over here.
I'm trying to kill it.
Yeah, exactly.
With the new competition. I think Costco did market these around Celsius, so
I think
this is the best flavor. I think these are new from Costco. So.
Isn't this the reason why Celsius sold off? Because there was like
yes.
Yeah, so that's kind of funny.
Yeah, or at least that's what Tanner had said, and I'm like, I don't really follow Celsius. Yeah, they're pretty good. I really like this one. The peach one is on par with the peach, which I do like from Celsius, and the orange one is just pretty mediocre, to be honest. Probably somebody else will love it, but yeah.
Yeah, I love, dude. We have like 700 people here apparently.
Yeah, I mean, like this is market therapy, and like that's one of the things that is needed in this time. Like, let me give a couple of like pieces of advice here too, just to be like really serious. Is make sure you're happy with what you're holding long term. Like it's painful enough if you're holding great companies that you have strong conviction in over the long term. But if you're invested in stuff that is just like stupid things you don't care about, like I'll say Peloton. Like maybe somebody out there is like, Peloton's the best thing ever, and I want a big investment. Great, do that then. But well, yeah, Tanner. But if somebody's like has a bunch of Peloton, they're like, yeah, it's just in it for a trade, and I'm trying to get back to my cost basis, and you have no conviction, man. Like any stage in the market, it's important to be confident in what you're holding, but especially right now. That way you can stomach days like this. It's okay too, by the way, this weekend, the market's closed. It's perfectly okay. And in fact, very healthy. Go out, touch grass, enjoy life. Like Teva said, when in doubt, zoom out. That you can see that in the past, all these events which felt terrible, like Liberation Day felt worse than this by a lot, even though this could have more impact long term with reigniting inflation. And I do have concerns with that. Usually these end up being good buying opportunities. Doesn't mean you have to go on margin. Doesn't mean you have to do 0 DT options, anything like that. But just buy what you have strong convictions in. Hold that. Use the money that you actually have, not somebody else's money. If you want to use margin like Tevis, that's fine, but don't invest money that you can't afford to lose. And in that way, in times like this, even if you run out of money, which I'm effectively out, I've got a little bit of money coming in here and there, and I've got like $1,000, but I can just sit on my hands and wait, and it's fine.
Donnie's live right now.
I hope that's not true, but midterms cannot get here fast enough, Tevis.
Do you know? Yeah, man. Do you know if Donnie's live right now, and if so, do we want to listen in for a second? Nah.
This is we can, and it'll relate to the market, and this is the Friday show, so a little bit loosey here. Yeah, as far as the other piece that I'll say is, a couple of people asked what I was doing since Tevis kind of shared. I bought a little bit of Figure Technologies. Probably not the best place to be buying it, but I'm like, between that and BMNR, I want to buy something that's really, really sold off. Robinhood just continues to fall. But I decided just to buy some Figure this week, or today rather. And outside of that, I've not really done anything. So just holding, waiting. It's frustrating. Sold some covered calls, like I always do that every single week. But we're kind of in this quagmire for a little bit. Now, the nice thing is,
hard disagree on this. Liberation Day can be changed with a tweet. This can't. Yeah, it can be changed with a tweet. We're no longer going to engage in this war. It's over, guys. War's done. Peacetime. And you'll see how hard the market's going to rally. Like it's external factors.
Yeah, the hard thing is the market really doesn't believe. It would need something more than President Trump just saying, "Hey, we're at the end of the conflict," or because he's been saying that.
He's been like boy who cried wolf. He's said that like every other day now.
And I was very skeptical. Every time he said it, VG would just do this, and I'm like, all right, I'll buy more. And I did sell a couple of leaps. I think was it 20% of my leaps? Yeah, 20% of my leaps, which are up like 400 or a 4x earlier this week, not today. Haven't rebought those. I don't think I would. We'd have to see VG at 11 or something like that. But
sir, I take offense at this. Okay, I am more American than you, sir. Just kidding, maybe not. But shall we flip over? Okay, so here's the game, guys. We're gonna flip over to Donnie. Whatever he's saying, if it's unrelated to the market and or something to do with the market, we're gonna flip off. If he's talking about like this is Biden's market or what, like we're gonna flip off. But we're just gonna play Russian roulette with what he's saying, and if it's related, we're gonna keep listening, and if it's not, we're gonna flip off. You ready? All right, let's do it.
Took all three of them. We took in a total of almost $3 trillion from just those three countries. But Saudi Arabia signed the largest defense sales agreement in American history, nearly $142 billion of the finest military equipment anywhere in the world. We make the best military equipment in the world by far. Nobody's ever figured out the Patriot. I mean, when you can shoot down 101 out of 101, that's good stuff, right? And
what do you think, Roy? On or off?
I think off.
All right, he's gone. Fiesta Friday, baby. Fiesta. All right, what are we talking about, Roy? What are we talking about?
I don't want to listen to any of that unless it's really Taco Tuesday or something like that. So, okay, so I think we're probably good for macro stuff. I see a lot of Q&A stuff that we're going to definitely get to. Let's talk meta, and you can take the lead on that one. And then maybe we can pivot into like SoFi, rate cuts, inflation, and the loan platform business. I want to hear your thoughts on my theory on there.
Yeah.
And maybe buybacks.
Yes. Dude, I have like 4 videos that I need to make this weekend. It's going to be a great, I feel really energized, honestly. Like coming back from this trip, I feel really good. I feel like I want to make more content. I know it's going to fade away like real quick, but I have like a video on Meta, a video on SoFi that I want to make on Tanner's post, and the BM&R video. Okay, guys, if you watch one video of mine over the next couple of videos, it's going to be the BMNR update on Saturday, tomorrow, because there's been a lot that happened with BMNR. The stock price is shit. I get it. There's been a lot that happened with BMNR with the what is it called? The Pier 2, the accumulation, the regulatory front on Clarity. This is going to be one video you're not going to want to miss. Maven going live. But let's start off with Meta, Roy, and
hold on 1 second. 1 second on Meta. Since you mentioned BM&R, did we talk about the Ethereum on exchange on Tuesday?
Ethereum on which exchange?
Okay, let me just show this. I made a video on BM&R actually recently too, just because, like you said, there's so much news. But I have to show you this too before you do your video. This is all the Ethereum that's on the exchange, centralized, decentralized. There are a couple of different indicators. They show slightly different amounts. But yeah, this drop right here is real.
Yeah.
Let me actually look at it more recent time frame here. We dropped from 15.8 million to 15 in a day. The largest drop in a long time. A lot of accumulation by institutions, by ETFs, yes, by Bitmine, and also by Wells. This was really interesting. So there was no single one catalyst. Crypto, of course, I think, I don't know. I think that's probably enough on that. But like the Clarity Act, I don't think it gets passed. I've got my my bet using the predictions market of it not passing as my hedge for my crypto portfolio. So we'll see.
Yeah. We'll definitely see. There's issues even with this new draft, but it sounds like we're going in the right direction, relatively speaking. The conversation's still going. So more to come on Saturday on that video. Okay, let's talk Meta, guys. There's a couple of news that happened with Meta. First of all, they had this lawsuit where basically this woman, I'm paraphrasing, and I don't have it in front of me right now, but maybe Roy can help me and pull that up while I just explain it. Basically, this woman was suing Meta because she got addicted to Instagram. And I believe the payout for that lawsuit was $3 million because Meta was super addictive. And this woman claimed that from a young age, she got really addicted to Meta. And I think Meta lost like $100 billion in a day or something in market cap. So that was the first piece of news, okay? The second piece of news, the next day, was Meta increased their spend on an AI data center in Texas from a prior commitment of $1.5 billion to now saying it plans to spend up to $10 billion. So a six-fold increase in the spend of this data center in Texas.
You want to throw it up?
Yeah. Basically saying they want to bring 1 gigawatt of capacity online by 2028. They're saying to Wall Street that in January, their capex this year, or they said to Wall Street in January that their capex this year would reach up to $135 billion. And as we know, big tech, mega caps, pretty much all companies have just completely sold off on capex announcements. So if you're asking what is the deal with Meta, those would be the two big pieces of news. Number one is this discussion that's ongoing right now. Is Meta having their big tobacco moment? Like it's clearly bad for you. It's uninvestable. And I'm so curious to get Roy's take on this because that's been sort of Roy's argument, ethical type of argument. And it was proven out in court. I mean, it's a slap on the wrist. I think they would make back that revenue from that lawsuit in like 56 seconds or something. Insane. Like it's nothing. It's not even worth the time that they spent in the lawsuit. Just agree to it and move on. And then the second argument is around the capex spend, because right now Meta is trading at a 16 price to earnings ratio. Okay. It is one of the cheapest valuations that you've seen in Meta in a long time. Over the past week, Meta has lost, get this, guys, 13% in their stock over the past 5 days. And over the past month, it's down 19%. It's currently trading at $525. So right now, the question is Meta a buy? And what do we make about these two pieces of news specifically? So we can break it down however you want, Roy. This is one of our key topics today, guys. And the second one is going to be the SoFi topic. And then we're just going to open up to Q&A. And we have like over 20 questions already bookmarked. So keep bringing them in.
And we can actually go a little bit longer today. You want to do forward price earnings or price earnings? Which one were you citing? Forward?
I was citing price to earnings. Not
just price earnings. Okay.
However you slice it, this thing looks cheap, man.
Yeah. Well, yeah. Okay. Here's the price earnings right now in Meta. So it's not like historically and ridiculously cheap. Like this is not the Meta under $100 moment. 22. But if you look at forward price to earnings, it is pretty cheap. So if I didn't absolutely despise Meta, I would actually still not touch it here. I think that there's better buys even in the Mag 7. I think both NVIDIA and Microsoft are much better buys. The danger here is, my understanding on this is not a settlement. Instead, they've actually been found liable. And what this opens up is precedents. So if they said settled, there's no legal precedents. It's just them saying, hey, we've settled for whatever, and the specific intricacies can't. Well, exactly. That's it right there. Yep. A class action lawsuit is very likely, I would say. Individuals can also sue as well. Across the board. And so $3 million, yeah, it's incidental, it's nothing, but this opens up a whole can of worms, and we'll have to see where this goes for both Google and for Meta. Google, I wouldn't be as concerned about at all, but Meta, like, they're not going to die from this or anything like that. They may be forced to make some changes, some people have asked, like, is this a bad parent thing? Is this a, blaming Meta? I say, why not both? Honestly, with our kids, I've got 2 adults now and then one 13-year-old girl. We've been very careful with the amount of social media that they're allowed to be exposed to up to certain ages. And when they hit certain ages or certain levels of maturity, he was a little bit more mature than the other. Not going to name names. We would allow them to have limited exposure up until the time that they're actually adults. And it's like, hey, you guys are adults. You do what you want. And the nice thing is our kids have turned out really good. Our boys use a little bit of social media, but it's very limited, which I think is pretty healthy. I'm less healthy than them in that. And our daughter has been protected from some of the worst things on the internet as a result. So, but yeah, I think it's maybe a both and. But yeah, if this opens up precedents, especially because it's a civil law, it's not based on beyond a reasonable doubt, but instead of preponderance of an evidence. It can lead to a lot more damages being found or massive changes as well. So,
yeah, man. Look, I think this is giving me flashbacks, like PTSD, of the dude with like 7 Tesla shares who sued Tesla, and
that was silly.
This is equally as silly. It's like, how about, like, at what point do we stop being freaking adults and saying, hey, like, if I start feeding my kid Philip Morris cigarettes every day, like from 5 years old onwards, like, can I have precedent to sue Philip Morris? It's like, dude, how about you be a good parent? First of all. Second of all, if I'm invested in a company and putting aside the ethical concerns, this is going to sound really bad, but putting aside the ethical concerns, if the product of the company is like digital crack cocaine, then that's a good business model. It's probably a bad, ethically speaking, business model, and I get that. That's a separate thing. But the little hamster wheel, the little dopamine rush, like, that's a good business model, man. And it's proven because Meta is a juggernaut. Okay, and we can talk about the ethical side separately. And sure, there's going to open the door for, maybe some regulatory piece or some more guardrails. But at the end of the day, if that hamster wheel is as big of a dopamine hit as it currently is, there's nothing that will stop people from using it. Similar to TikTok, similar to Instagram, similar to X. I'm on X like freaking 7 hours a day, man. It's like the algorithms have gotten so good that, people on, I don't know if you've ever seen this, Roy, but like people on Instagram are like, oh my God, my phone's listening to me because, it brings up all the ads of all these things that I talked about. And it's just like, and then you see other people who are like, my phone can read my thoughts because it knows what I want before I want it. It's like, yeah, it's because it's gotten so good at like knowing your behavior. I saw this research, and this was a couple years back, where it was like based on I think only 100 likes that you make, the algorithm knows you better than like your closest family member, your closest friend, or whatever. Like the true what you're into and the profile that it has on you, because it's billions of data points, right? And so at the end of the day, like that's what the product is. So if you're fundamentally against the product, then that's a different conversation. But if you're like, hey, this thing made you addictive, it's like, yeah, because it's an addicting thing. Use with caution.
Yeah, it's. I hear what you're saying. I just yeah. I really do think that there's probably more damages that are likely to come just because of legal precedence angle. So,
Sure, but like,
but yeah, there's blame on all sides. I would rather. I mean, I could never invest in Meta, like no matter what the price is. I
no, but
just can't.
yeah, but like that's an ethic. So I think that ethic. Well, I mean, this is subject. I mean, this is, I guess, a good discussion because like Elliot here, I think nailed it. You know, where does it stop? Can I sue Netflix for binge watching? Like, can you sue? Like, what is
Yes.
the line that we draw for not taking accountability for our actions as adults?
I mean, like you can sue anybody for anything, no matter how stupid it is. So the question is, would you be successful for that? And then no. Bottom line is no. Every single product creator, whether that's a hardware product or software product, would love to have the level of addiction in social media, but few actually get there. And I think like I'm not concerned about adults like using like adults can be adults, whatever. It's the kids, and I really question that Meta has done enough, especially Google. Google maybe so, but I don't know that Meta has actually done enough to actually prevent minors from getting just all caught up in the algorithm and just addicted. I've seen it time and time again, and it's really sad. So, but at the same time, like the algorithm is not always like that great. Like today, I'm rarely on Facebook. I actually got on Facebook to post a couple of things today, some life updates, and then it was feeding me ads of like some weird. I think it's just like, hey, Roy's 45 and he's a dude, so he must like seeing hot chicks or whatever. And it was like some AI. I'm like, why?
No.
And there's a bar that you can click, and it's like, okay, why am I being fed this? And it's just like, yeah, it's because you're interested in like news and entertainment. I'm like, this is not news or entertainment, dude. Like, block that. And so, yeah, whatever. But like YouTube itself, that algorithm, both in ads and also like the video feed that it offers me, it knows me incredibly well. X also knows me incredibly well. And probably a lot of that to do, Tevis, is I'm almost never on Facebook. I don't use Instagram, period. I'm on X every single day, and I'm on YouTube almost every single day, probably 4 or 5 days a week. So the more you use it, the better it knows you, the more addictive it is, because I mean, it's feeding you things you want to watch.
First of all, there is no age limit on liking hot chicks, so let's put that to the side. There's no debate around that. Second of all, like it knows you better the more you use it, and therefore becomes more addictive the more you use it. It's a vicious cycle. That's the algorithm being fine-tuned to your preferences and showing you more of what you want. Now, I get that because there is a slippery slope there, because wasn't there this study that was done that the more you use social media, the more polarizing your political views are, because you essentially start off in the center, and then whatever side you get hooked on in the algorithm, it just shows you more and more and more of that. And it becomes a confirmation bias echo chamber where eventually you become so radicalized on either end of the spectrum because that's the content that you're fed. And I get that. And I also get that there's a door that can be opened for manipulating the algorithm to essentially have this, broadband mind control. Those are long-standing existing problems that are fundamental to the product of Meta. It's not something that happened today. Why the hell were you buying it at $700 or at $800 if you actually agreed with that? And why are you selling it now just because a lawsuit said it's addictive? It's like, yeah, no shit, Sherlock, it's addicted. Like that's the thing that's been making you money as a shareholder this entire decade. why is it now the reason that you're selling it off? You know what I'm saying?
I mean, well, the market is in a shoot first and ask questions later mood, and it's not just Meta. I would argue, well, at least for me and my perspective, I would say that probably Nvidia and Microsoft are better buys here. Anything in the Mag 7 except for maybe Apple and maybe Tesla, just because of the valuation on Tesla, is something that I'd be interested in if I had money and everything else hadn't fallen. This is probably a little bit harder to see, but this is the forward price to earnings ratio of Nvidia, Microsoft, and Meta. And I want to do the forward here because you can actually see expected growth this way. Meta is the cheapest at 17.39. This is 1 year forward, and 20 and 20 on Microsoft, which is growing about 15 or 16%, and Nvidia, which is growing a lot faster than 15%. There was a lot of actually discussion and a debate on like, is Microsoft or is Nvidia the better buy here? And probably the answer is both. Very different companies. Nvidia is more cyclical, but it's more hyper growth. Microsoft is probably more durable. Who knows with what's happening in software? And the biggest argument, though, for Meta is not the price to earnings, but the forward or even the present free cash flow yield. So if we look at the free cash flow yield here, actually, no, I'm wrong. This is the opposite. I was thinking price of free cash flow, and I can pull that up. The free cash flow yield is actually highly favoring Nvidia over Microsoft, and it is barely there at all for Meta, which is a little bit surprising. Let me actually change that instead of that to price to free cash flow. It'll be the same ranking, just in opposite order. Price, yeah, we go. Price to free cash. We'll just
exactly. Please don't sue us, Express Investing, because I keep popping up on your feed. Okay, like I'm not the cause of your addiction, and like I don't know, man. I get that people are saying that there's more systemic issues with Meta, but like people will always say that crap. But like after a stock has fallen, like watch Nvidia is going to fall to 160 because of the macro, and people are like, oh well, there's something up that Jensen's sleeve. He can't, like 1 trillion. That's BS number. Like people are always going to say this because the market is this overly emotional thing that it has recency bias, and it's just. Yeah, I don't know. If the market was a person, it would definitely be a woman. I'm going to piss some people off with that one. But
I'm not going to comment on that. I'm married, and I've got a daughter. Can you throw up Decide I Arrow Quill? 643. Is Nvidia literally going to become a Berkshire of tech? Kind of genius with their cash flow. Yeah, Nvidia has a too much cash problem, and they're using it to do a lot of different types of investing, including in tech. That's one of the things, like long term, which I think is pretty attractive, especially a lot of the companies. A few of them like, I don't really care. I don't know about this, but they're going to be in a very healthy place, even though they're very cyclical. We have this debate online, and it's actually surprising. Actually, let me throw this up real quick. I want to see where the poll is. I put it up about 24 hours ago. It was surprising how divided things were. On X, I figured people would be a little bit more degenerate and pick the more aggressive option.
I'm just going to put the chat up here so I don't have to throw stuff up. I don't know if that's okay, Roy.
That's fine. Throw this up real quick, though. Okay, so company A, by the way, is Microsoft. And really, I removed the names here just so, if there's bias towards Microsoft or NVIDIA, this kind of removes it, although most people kind of knew what I was talking about. So 22 forward versus 21 forward. This is yesterday. Lower now with durable recurring revenue growth of 15 to 16% every year for Microsoft. You can question that, but they're probably going to get that even with what's happening in software and seat-based revenue. And then NVIDIA itself has growth of 65 to 70% in the next 2 years, 30% in year 3, 17% in year 4. And, people are saying, yeah, it's cyclical. And yeah, but if you're looking 4 years out, that 70% is higher than anything Microsoft is expected to get. Even then, will it go negative at some point? Maybe. But yeah, I would pick NVIDIA easily. It's going to compound a lot over that time. That even if like year 5, which is so far out you can't even project it, you get like 3% growth and Microsoft gets its 15 or 16. I think it's easy NVIDIA. But that's not, some people actually had some really good comments in this. And they said, hey, Microsoft, because it helps me sleep at night, it's going to make money. It's going to do well. It's going to make the 15 to 16%. I don't even have to think about it. I'm like, there is some point to that. So Meta, I would say, like if I was going to throw this up there, I think it's maybe the hardest to hold psychologically because you don't know what's going to happen. It's feast or famine with that. It's a great company as far as the actual business. It's a great CEO, Mark Zuckerberg. I personally can't invest,
Who?
but yeah, Zucker.
Kidding. Sorry. Continue. I've never
But
heard
yeah,
of that.
so like, would you put Meta then at number one in terms of the Mag 7 as a buy right now for the long term, not 3 months or whatever?
Okay, hold on. I want to scroll up and put this comment up. The addiction to social media will only get better as AI is better able to analyze our data and spit media back out at us too. Agreed.
Probably.
That's
And
number
make
one.
media.
Number one. Number two, Meta's acquisition of Manus, ads are going to become so good and they're going to lead to more purchase events. And as a result, they're going to lead to way more people doing Meta ads, doing Google ads. So I think Meta is fine as a business here. I think personally, again, not financial advice, where's my banner? Um, I am personally buying Meta because I think that they're undervalued relative to where they should be, and especially with the capex spend that they have and the hamster wheel. Exactly the same reason that woman sued Meta is the reason I'm fundamentally buying Meta. Maybe not exactly, but like you get my point because it's an addictive product that's going to continue to increase in adoption. I think Microsoft is definitely very cheap here, and I agree with the assessment that like, hey, it's a steady Eddie business that's diversified, that's going to do fine. If Microsoft is, buying back shares, or they announce some news around buybacks, then they're going to do very well. And because I think people realize that Microsoft is also not going anywhere. Now, with regards to Nvidia, man, it's definitely tempting. But I think the comparison you made is really interesting, right? Because it's a cyclical business. Sure, you're buying that growth, but that growth is going to be very difficult to maintain in the future. And so, as those multiples compress, the market is going to hurt Nvidia disproportionately, and that's going to come next year. It's going to come in 27. Like you just can't. Like next year, what you're going to put up 30% growth rate, 40% growth rate off a base like Nvidia has. Those
More.
are huge numbers. You got to keep up
Yeah.
this across the board, right?
Okay.
So,
I need to throw up what they actually are projected to do.
sure.
And the nice thing about when you're looking at projections, take them with a grain of salt, obviously, especially when they're more than like 2 years out. Especially in this type of environment, like people are just guessing. But usually, the more guesses that you have, the better those guesses actually are. So here is what they're actually projected to do and deliver. If you can throw this up, and we can see revenue consensus is that they're increasing. Actually, that's not the growth rate. Yeah, it is 60 to 70%. I would have to pull up a couple of different numbers, but we're not looking at seeing this actually slow down for a couple of years. And slowdown is still growing extremely healthily. But the further you get out here, the less clear it's going to be. Now, the number of analysts you can see here, when you get in the 50s, like that's a lot better read than like Airtest Systems, which has 4. There, you just take it with a complete grain of salt. It's just people guessing and everything. You can look at it on a quarterly basis as well. It's up and to the right versus Microsoft, like everybody knows, like 15 or 16%. So yeah, the slowdown is at least 2 years out. Well, let's do it this way: financials, and I can pull up the revenue and make it the projected. So here, and we'll do the percent change as well. Okay, so here we are, 2026 January. We're looking at by next January actually increasing. Which remember, Jensen at GTC, he said over the next 2 years they're doing not revenue, but it's pretty close to revenue, $1 trillion. You look at what they're planning or what they will likely put in here over this year versus next year. This is well under what he was saying. So they're probably going to be higher than this, even given the environment that we're currently in. Then you have the slowdown of 30%, which is still really good annual growth. And then the 17. But again, this is the least important, right? I mean, it's very important, but it's so far away. The market's not going to really fully price that in. There's people that are like, oh, bank on it, bank on negative. I would not bet against it. Now, at some point, obviously, we're not going to be seeing 70% year over year. But I do think that this type of environment, the 30s and the 40s, can persist for, even through 2030. And then beyond that, it's anybody's guess. So I don't know. This is not falling off a cliff to me. Will we see something like this at some point? Probably, yeah. This was 2023, 0.2% growth. 2020, we saw negative 7%, which by the way was the worst year over year that they ever had. Going back a little bit, it's not the worst. This was actually the great financial crisis. They were a newly public company. They were focused on just consumers, and incredibly different company. So I wouldn't focus too much on that. But you can see every so often it is cyclical. This build out, it's not going to always be accelerating at this extreme. It just can't. But that doesn't mean they're going to put up terrible numbers. And Jensen Huang in NVIDIA is one of the best leaders and one of the best companies in the world. So it's easy for me to buy more here. It's easy for me to hold it. I can sleep like a baby at night, even though I know it's going to be volatile. It's going to be lumpy. And maybe for the next 6 months, it's not going to be fun to hold. So.
All right. You know what?
And
go ahead.
Oh, let me add one more thing that I almost forgot. They
Yeah.
mentioned returning 50% of their free cash flow to their shareholders going forward, which means likely increasing buybacks by a fair bit. And you might think, oh, buybacks are not really that effective. I mean, we're trading at a 24, it's price to earnings. So they're not ineffective here. It's not like the Palantir situation when you're trading in the hundreds of price to earnings going forward. So.
Yep. Okay. There's only one thing that will settle this conversation for us, Roy.
Yes.
I think that's a tier list. Okay.
All
So
right.
I'm just getting it ready here for us. Can you name the Mag 7 for me? Amazon, Microsoft, NVIDIA, Meta. Who else is there? Tesla?
Tesla, Apple,
Oh, yeah, Apple.
Google.
Forgot about those guys. All right. Tesla,
Apple, and Google.
Apple, and Google McDougal. Google. All right.
And let me.
Here we go. So let's, we're just going to do this on Canva. Here's all the logos. We're going to make them equal size. So you got to bear with me. All right. And
Now, if we need a tiebreaker, I think that's when we use the audience as a tiebreaker.
I mean, I'm going to make my list. You make your list, baby. All right.
Okay.
And we're going to say, here we're going to say that, that this is Ron. Okay. I'm going to put you down here. And we're going to say this is Travis. Okay. You guys are going to get this in real time. All right, Harry, this is what you wanted. That's what you're getting. All right. Ron, you're up. Top to bottom.
Yeah, I'm pulling up real quick. I want to look at forward projections, and I hadn't
No.
looked.
No.
Okay, fine.
None of that. We're just
Just
going
gut?
by vibes. We're just
Fine.
going
It
by
is Friday. Okay, number one is NVIDIA, obviously. Number two, I would actually put Google on today's prices. Number three, let me put Amazon. Actually, no. Number three, I'm going to do Microsoft. It's fallen off a cliff. So yeah, just because of the valuation there. Amazon number four. That's not disrespectful at all. If Amazon was the only one that was in the position where it's at right now, I would be a buyer if I had money. I got to do Tesla after that. I know the valuation. People will say that that's absolutely ridiculous, but
hold on just a sec. What are we doing, like return in 5 years or?
Yeah, let's do 5 years.
Okay.
Further than that, we don't even know what the world will look like. Meta. Okay, actually, if we're doing return, I was thinking we're doing like a ranking as far as what our preference would be. So I can't invest in Meta, but I would actually put Meta right below Microsoft. So move that up. Amazon will be. Do I switch Tesla and Amazon? 5 years.
Are you
It's
putting Apple at last? I guess.
oh yeah, Apple's last.
like all the way to the bottom last.
Yeah, you just remove it from it's no longer Mag 7. No, I'm just kidding. It's
So brutal, bro.
yeah. All right. Let me move Tesla up above Amazon.
Interesting. 5-year return, Tesla above Amazon? Yeah, I could see that.
Yeah, we in 5 years we should start hitting the robotics wave. Tesla is very well positioned with that. I don't know exactly what's going to happen with like the SpaceX stuff, the Terafab. Will everything work? Probably not, but I don't want to bet against Elon. We might be looking at a very different company as well. Maybe it all gets that there's just a merger between SpaceX and Tesla. So I kind of hope not, but I kind of like. I would love to own some SpaceX, but like if you look at the valuation, there's a private equity bubble. So I'm torn on that. But yeah, just robotics. There's going to be a lot of winners in the space, and yes, Amazon is one of those. But if we're looking at like consumer robotics as well as everything else that Tesla is built around, I think Tesla is going to be positioned incredibly well. They're very vertically integrated, and no, the valuation doesn't make sense right now. So yeah, let me say final answer right there. So Travis, where are you at?
Okay, 5-year return. What do I think is going to be the highest? I don't think it's going to be Nvidia. So I'll put Nvidia somewhere in the middle here. 5-year return, Nvidia, maybe. I don't know. What do I know, man? I'm freaking degen. I think Meta is going to be up there. I think Amazon's going to be up there somewhere.
Oh, I thought you were going to do that number one. I was like, man. I mean, it could be. It could be. 5 years is a long time. So let me just say on my list, I think the returns are going to be very, very good for all of them except for maybe Apple.
Hold on. I think we need prices here, Roy, because I need to figure out like.
I'm not going to do prices. That's
no. I need to know what today's price is. You know.
Oh yeah.
So 273. Let's just make this a little bit bigger. Is Google. Okay. Let me go here. Nvidia's at 167. So we have it for posterity. People can make fun of us 5 years from now. Apple is. Do I not have Apple on my FANG list? Apple is so disrespected right now. Holy crap. 248 is Apple. 248. And Tesla is like 350 something.
The thing is, if somebody's watching this video in 5 years, which, I mean, that's not how the algorithm works, but hypothetically, they'll be like, oh, man, I wish I bought more of literally probably all of these companies in 5 years.
Yep. Microsoft is at 356. Gee, 356. Meta is at 525. I know that one by heart. And Amazon's at 200. Okay.
200.
So, wow, dude. That's crazy. Okay, so let's see here. I think
I'd almost rather you put the market caps instead, but it's fine. Like the price is fine.
I can do market cap. Go market cap.
But, yeah, no.
All right, so I think
this is.
I like. Sorry, hold on. I can't look at your list. I'm gonna get influenced.
Nvidia.
Yeah. So okay, I think I'll put Google under Nvidia. I'll put Amazon above. I'll put Microsoft somewhere by Nvidia, and I'll put Meta somewhere by Amazon. So, all right.
It's hard, man. Okay, well, what's your bottom one? Is it Apple?
Apple's the bottom one. Like that's not changing.
Okay, yeah, just move that down. Move that down.
That's where it belongs. That's in its place right now.
Okay, and then let's eliminate one other. So out of all these, what beyond Apple, which one would you least want to own right now for 5 years?
I think Tesla's going to do good with robotics.
Yeah, Elliot said.
Forget the 5-year return. The way I'm going to track this, because it's going to make it easier for me, is like, what would I rather own? And I think what would I rather own looks like this. Yeah. Like
All right.
actually, let me flip these because I think Anthropic is gonna just crush.
Yeah. And
Anthropic,
Amazon
I,
is going to be a beneficiary from robotics too. Plus
yeah, I think
AWS. Like it's me having Amazon where it's at is not saying I'm bearish Amazon because I'm not. It's hard. It's like
okay.
choosing your favorite child.
I forgot where you had Amazon. I'll bring it up in just a second. Let me just explain my thinking here on all of these. Anthropic, massive. And I've paused the chat on like my so I can't see it. I think Anthropic is going to be massive. I think Anthropic is going to IPO at some point. Amazon's definitely undervalued. They're spending a ton on capex. I think they're going to do very well. Meta, I mean, the product is addictive. The algorithm is going to get better and better. The acquisitions around the ad spend, I'm very bullish on Meta. Nvidia, it's going to be cyclical, but I can't keep it lower than this because it's an absolute dependency on the market. You cannot have the AI race without having the picks and shovels. Google, I think super well diversified business, can't really go wrong. It's definitely off its highs quite a bit. Tesla, honestly, Tesla could go above Google to some degree, but I think that would be risky. I think with robotics coming and with what they're making in the Optimus
Yep.
side of things, Tesla, and especially the FSD that they have, it's definitely the risky play here. But they have upside potential, and quite frankly, man, if Tesla and SpaceX combine, like we were talking about on Tuesday, Tesla could be like the top one of these because they can just get a double up easy peasy from SpaceX. Microsoft, I think Microsoft is definitely super undervalued. I would definitely be a buyer. I've just never really liked Microsoft from a product offering perspective. So that's just bias on my part. I definitely don't mean to hate on any Microsoft people. I think it's a great business, and but I don't like their suite of products. I don't like I'm not a Microsoft fan, but at the same time, like I've told you, Tevis's DGen Mag 7 strategy. It's at any point in time buy the one that's the most sold off and sell the one that's the darling. And right now, I don't even know who is the darling. I don't even know. Maybe Google. But okay, so that's why Microsoft's there. And then Apple is just Apple. They're not really innovating. I think after Tim Cook leaves, there is a possibility for them to do more, but they're not spending any on capex. And people are saying that that's like the best AI strategy. I don't buy it. I think you need to spend money to make money. So that's my list. Now, this is Roy's list. So definitely
Let me
some
make
difference.
let me make another argument for Nvidia, and Josiah said it, and I think he said it well. All of these companies, really except for Apple, need
NVIDIA.
one company on there,
Absolutely.
and that's Nvidia. Now, yes, many of them, actually most of them, are building and looking at building their own products as well, which they will use for sure. I don't know if they're going to be able to market those to too many other people, but like the demand is relentless anyway. And Nvidia still has the best product. I mean, we saw like SMCI guy like smuggling in billions of dollars of Nvidia into China. Like it's the best product out there. I think it's going to continue. Vera Rubin looks very, very good as well. Man, I would not bet against Nvidia. It's not going to be up in a straight line, but
Yeah, I think
it,
to be clear, we're not betting against any of these companies. I would happily own any one of these companies in my portfolio any day of the week and sleep like a baby. And I think Roy, I speak for you too when I say that. I think
except
that
for Meta.
with regards to Nvidia, well, yeah, sure. I think with regards to Nvidia, like I understand that every other company is dependent on Nvidia as a picks and shovels play, but I think that if we extrapolate out several years, you're going to get these other companies getting an outsized level of arbitrage off of their capex investments. And I think Amazon, with all of the shopping online, I think Meta, with all the attention in social media, are going to get an outsized level of benefit from the AI spend in general. Nvidia is cyclical. I think the market is going to punish them in 26, 27, just as the market is right now punishing every other company that's buying from Nvidia. So, like we've said before, I think the name of the game becomes which of these companies has the highest ROI on their current capex spend that they're being hurt for right now. I think
Yeah.
Amazon's in a good position, especially with the robotic side as well. think Meta.
Well, let me push back on Amazon a little bit too. Like I agree, absolutely. AWS, also Azure for Microsoft, and also Google. Like these guys are going to do incredibly well on the cloud business itself. Robotics, Amazon, and probably Tesla are the big winners. And Nvidia, of course, like is winning no matter who wins there.
Mhm.
But the thing with Amazon is we saw them have to do a pretty awkward race for sustaining their capex. We're not seeing that from Meta. They print cash. Nvidia, they benefit from capex, so it's not really an issue there. Google, of course, has plenty of money. Tesla, plenty of cash. Microsoft, plenty of cash. Apple, I mean, they're not in the eye thing at all. So Amazon's the one that is limited. I mean, all of them have like limits at a certain point, but they have to be a little bit more cautious with how they're doing their capex right now. And I think that that might hurt them. Like I wouldn't want to put them number one in this. And again, I put them sixth, but I still think they'll do very well. It just maybe not as well. Yeah, PayPal would be under Apple. Sorry.
Just kidding. PayPal is above Nvidia. No, I'm kidding. I'm
Yeah,
kidding.
that number one PayPal. No,
I
me 6 months ago, maybe, but oh man.
Yeah, well, this is also interesting. So Tesla has uh, incentives for Elon dependent on market cap, and then Meta also announced incentives for executives depending on market cap, and I think they have to do like a 5x in market cap, something like that. So I don't know, man. Like again, we were made to look like fools in 2023 when we had Matt Money on and we were shitting on Google because they rolled out Bard and it created Black George Washington. And I'll never forget that till the day I die, how bad Google Bard was. But you know what happened? Google hit all-time highs. Gemini was the number one downloaded, AI assistant out there. And again, I think all of these companies, I think Apple can definitely make us look like fools. 6 months from now or 12 months from now or 18 months from now. It could definitely happen. I think, again, we're not bearish on any of these companies. I think it's just a matter of which would we rather be in. So what I'm going to do with this is I'm going to take a screenshot and I'm going to go on X and I'm going to say Ron and myself did a little stack rank of the Mag 7 on vibes going 5 years out. What should I say, right? Who won? Which one of these rankings do you most agree with?
Or you can just say, "Is Roy an idiot?"
No. I think you're going to win this one, dude. I think there's a ton of NVIDIA lovers for good reason, and I think they're definitely going to come to your rescue. Did I forget one?
I mean, like, I don't know about that. I do think you're going to get some hate because of where you put Microsoft, but I'm going to get some hate because of where I put Amazon, and the Apple lovers are going to hate us, but oh well. I think we'll actually surprisingly get a lot of hate from the Tesla guys. Like,
Yeah.
that's the thing is Tesla
They-
could be the number one outperformer over the next 5 years. If robotics does what Elon thinks it'll do, and that the Elon timeline actually plays out for the second time ever, Tesla could be number one. Optimus is a big deal. We just don't know how soon, how quickly, how much. But yeah.
Yeah, man. The Tesla crowd, they're just like Iran, These hands rated E for everyone. Everybody's going to catch some blowback.
TJ's with us. He says Apple won't double for 10 years. So hey,
I
TJ.
can't catch up with the chat, man. I'm trying to scroll down. But yeah, I'm trying to. Yeah, why don't we ask AI? Ooh, that's an interesting one.
All right.
Let's ask Claude and let's ask Gemini. Okay, how about that, guys?
Yeah.
Um,
Now, if Gemini says Google's clearly number one,
yeah,
I'm going to cry foul there.
Gemini has definitely shot on Google before. Okay, hold on. So let's go ahead.
While you're pulling that up, like on Meta, like the other thing is you have Meta up a little bit high. They have except for Apple, which is just punted on the AI race. They have gotten the least out of AI, and I think Amazon is probably the next closest. Although internally, I know they're working on Rufus and everything, and Leo, but we'll for this to play out in the order that you have. Meta, and also probably even where I have Meta. Meta has to get more out of what's happening with AI than what they have before. They've paid a lot of money. They've brought over a lot of talent. They've invested a lot of time, and I think that there might be, if they don't start seeing some ROI at some point, probably this year, I think that we'll see actually Meta trade substantially lower, even if the macro has recovered, just because people fear that this is another metaverse moment where Zuck is a terrible capital allocator. I don't think he is, but I mean, that was the argument that was being floated back during Meta trading under 10 with the metaverse.
Bro.
So,
okay, hold on. I need to share my screen to show you that it's still generating, that I didn't like rig the election here, because this is what Claude just told me. It's still typing, by the way. It's still typed. I promise you guys, I did not view this ahead of time, but this is what Claude said. Meta and Amazon at the top. Oh, okay. Gemini's coming. Okay, hold on. We're gonna go with Claude first. This is way too much fun. I'm having way too much fun here.
Okay, we got to ask ChatGPT then too. Maybe it'll get some Microsoft bias in there.
So here's,
you want me to do ChatGPT?
Yeah, let me just read what Claude says, and you can ask ChatGPT, or we're gonna,
or we can ask Grok too. I guess we'll ask Grok too.
Yeah, I can't zoom this in for some reason.
You can just read it off then.
Okay, Meta best risk reward setup in the group. 21x forward earnings, cheapest Mag 7 name by a wide margin, printing cash, 3.5 billion daily actives, blah blah blah. Over 5 years, you're going to get durable monopoly in social at a value multiple. Compression has to unwind. Amazon reaccelerating, best quarter in 3+ years. Custom silicon is scaling at triple-digit growth rates. Retail is becoming a margin story, not a revenue story. At 27x forward earnings, it's not cheap in absolute terms, but in relative to earnings growth. Anthropic investment alone is looking like a generational asset bet. Google. Gemini is legitimately competitive in the model race, and the cloud is accelerating. Antitrust overhang is real, but probably gets resolved with remedies. Led the Mag 7 in 2025 along NVIDIA for a reason. NVIDIA number 4, it says undisputed AI infra king, 90% plus of GPU share across data centers. Problem is that 4.8 trillion valuation at some point in the next 5 years, the capex supercycle moderates. Competition from custom silicon chips away at margins, and the multiple compresses. So basically the same arguments that we were basically saying. Microsoft down 17% year to date. Actually, why it's interesting, Azure is still growing, Copilot monetization is ramping, enterprise mode is enormous, but the capex burden is massive, and the market is demanding receipts on AI ROI. Now, it's going to compound steadily over 5 years, and it's becoming a steady eddy. I sort of got, is this thing really actually listening to me? I just used the term steady eddy like 20 minutes ago. Apple at 31x forward earnings with only 9% expected revenue growth. The math is tough. And Tesla at last 200x earnings with mid-single digit auto margins. It's the entire bull case rests on the Robotaxi and Optimus, neither of which has produced consistent earnings. Musk has promised level 5 autonomy next year for a decade running. Jeez. Okay, now let's flip over to Gemini, and then we're going to flip over to ChatGPT. And while you do that, I'm going to put that all on a list for us so we can compare. Okay, here's what Gemini says. This is on the thinking mode of the latest model. I pay for Gemini 2. Same prompt. Meta number 1. Aggressive new incentive structure and relative valuation. 9 trillion market cap plan from executives. NVIDIA number 2. NVIDIA's backlog for Blackwell and Rubin architecture remains robust. Its position as the arms dealer of the AI era remains structurally sound. Amazon number 3, poised for a breakout as retail margins expand and AWS reaccelerates. Microsoft number 4, safest bet in tech. If it's the safest bet in tech, why isn't it number 1? But whatever.
Well, it's high risk, high reward for.
Yeah, I guess. It lacks.
But no, I agree with that. Like, if you want to buy one and sleep like a baby for 10 years, 20 years, probably Microsoft.
Mm-hmm. Google's return potential is tied to defensive search and monetization of Gemini. Number 5. This is Gemini saying this. The market was cautious in 2025, but the partnership with Apple to power Siri with Gemini 3 has boosted confidence. Tesla, number 6, above Apple. Highest volatility entry. Its return depends almost entirely on 3 binary outcomes: Cybercab, Optimus, and FSD. And then finally, Apple basically doing nothing. Smart glasses taking off in 27, unlikely to perform. So, Roy, why don't you share your screen with the ChatGPT results, and I'll plug these all in.
Yeah, ChatGPT, NVIDIA number 1. Why? It's still the core infrastructure of AI. Amazon, AWS for acceleration, true AI ads, triple engine. I mean, yeah. I might have Amazon actually a little bit too low. Meta, highest margin expansion potential. AI monetization is already working. If AI spin converts, it can outperform. Microsoft, basically it's durable cash flows, and it's right on that. Google, yeah. Tesla, optionality play. Yeah, it is massive risk, massive reward. And then, yeah, Apple. Let's see if Grok is finished. This is Super Grok, by the way.
Okay, hold on. Give me ChatGPT again.
Oh, yeah.
Just real quick.
NVIDIA.
NVIDIA.
Amazon. Meta. Microsoft.
Yep. Tesla.
Google.
Google, Tesla, and Apple.
Yeah, Google, Tesla, Apple.
Okay. Okay, hold on. We're doing Grok also?
Yeah.
All right.
And there's Grok's list. Meta is number 1, then NVIDIA, Microsoft, Amazon, Google, Tesla, and what do they tend to have in common? Apple. Now, I don't hate Tesla even being 6th. I know that's not where I have them, but yeah, they all pretty much say the same thing.
Meta,
the
NVIDIA.
Durability.
What's the rest? Meta,
NVIDIA, Microsoft.
Yep.
Amazon. Oh, I like that they did the valuations here too. That's nice. Google, Tesla, and Apple.
Wow. Okay.
But yeah, they're like people have said, they're pulling, from likely similar reports, and I know this is probably looking on X too, but yeah.
Okay, hold on.
Ed, thank you for becoming a member. Appreciate that, man.
All right, let me just backfill Claude, who said Meta, Amazon, Google, McDougal in the number 3 slot. NVIDIA, it's wild. NVIDIA, Microsoft, Apple, and Tesla. Wow. Okay. We're gonna put this all up in just a second. I'm seeing some trends, and it's gonna be interesting. This is actually a fun exercise, Ron. This is like typical Fiesta Friday type of activities.
Yeah.
All right. Last one, Gemini. Hold on. Where did I have Gemini? I had it here. They have Meta, NVIDIA, Amazon, Microsoft. Meta, NVIDIA.
Yeah, I see a lot of, probably the biggest commented one on from the people on this all 3 streams, because Tevis is all streaming on X, is Tesla, and it's just because like it could be. It's the one that's hardest to rank, because if you look at it right now and you're like, okay, which is most attractive right now in terms of valuation? Like, I'd have Apple higher than Tesla for valuation, but you're not buying it for valuation. You're buying it because of the upside. If you see Tesla as just a car company, I think that's an old argument, especially what they've done in the energy space and services space. With them launching Terafab, with Optimus coming at some point, robotaxis had never been like, oh man, this is the next huge wave for them. It should be a nice push for them, but they're more than just a car company. They already are with the energy, and with robotics, it's hard to see. Like, there's gonna be multiple winners, but Tesla, at least on the consumer side, and maybe on the commercial side as well, we'll have to see. But that's gonna be the first wave. They're gonna do very well there. But Elon has limited some of the TAM. Yeah, it's like, do you see them as just a car company? Yeah, they'd be the least. If you see like Optimus is for sure going to win, and it'll be here, or the market will be able to see it by 2030, you would pick, or 2031, you would pick Tesla as number one, probably. Maybe Nvidia even then.
All right. This is what we have, guys. This is what we have. So we're starting to see a trend. Tesla is third last for myself and for Roy. However, all of the AIs across the board put Tesla and Apple in the last slot. We both have Apple in our last slot, but yeah, we're a little bit more generous with Tesla relative to the AIs. Other than myself and Claude, nobody else. Everybody has NVIDIA in the top two. So Roy, Gemini, ChatGPT, and Grok all have NVIDIA in the top two. I have it as third. Claude has it as fourth. What other trends other than Roy, who has Amazon at sixth? Everybody else has Amazon in their top three, except for Grok, I guess, at four. Any other trends that we're spotting here?
Yeah, I'm probably a little low on Amazon. And I'm not bearish on them at all, but yeah.
I'm definitely the most bearish on Microsoft putting Tesla.
Yeah, dude, like, okay, so here's the argument, and I think it was a fair one in that NVIDIA Microsoft debate that we saw on X this week is you're going to give a premium on a company that is pretty much going to give you 15 to 16% returns, or not returns, but revenue increase, and it will give you good returns, over the next decade over a higher risk, higher reward. I'm not saying that the other one won't outperform, but there is a premium usually in that consistency, and so yeah, you got Microsoft. Like, that's a one thing. If I was able to change one thing, I'd bump up Microsoft probably, like, for sure above Tesla for you, maybe above Google. Although Google you're too low on, which is really ironic because a year ago on Google I'd be like, Google, I don't know. Things can change really fast, and if we do this list like 6 months from now, we're going to probably all have different rankings. I imagine I'd still have NVIDIA as number one and Apple is the lowest, but I could see any of the others move around to any other ranking.
Yep. It's an interesting exercise, that's for sure.
Yeah.
So we're seeing, so there you go. You guys have your AI ranking. How much of Optimus is already priced in? Dude, that's like part of their entire growth story right now, because on the financials, it's not even an equal equation here. Is his name Roy or Ron? It's actually Roy, but Ron on Fridays. So I almost didn't say Roy for a second. But yeah, exactly. Tesla is just a story right now, no numbers. Have you used Meta's AI? This is interesting. I didn't use Meta. I've never used Meta's AI, actually. What was the prompt? All right, what was the prompt? I'll show you the prompt because I have it here. So this is the exact same prompt that I asked Gemini and I asked Claude. What you think the highest returns will be in 5 years? Put the tickers, explain your thinking. I don't know the prompt that Roy used for Grok.
It was the same thing.
Something similar, yeah. Okay.
No, I did just use your image, so that might have colored it rather than just purely typing. But yeah, thank you for that. Appreciate that.
Yeah. There's 1,300 people here, apparently. There's 820 on X. What? I got to stream to X more often, I guess. But yeah, 1,300 people. Thank you for being here. Tip your bartender, like the video, share it out. I don't know. We're going to get to SoFi in just a second. Roy, we have 40 questions bookmarked. This is very scary because normally I stop it at 30, but this is an extra long show. And yeah, X is mostly bots. So thank you to the bots.
The bots.
Yes, it is premium, asshole. If you don't trust it, dude, Gemini ranked Google pretty low. So that's an indicator of trust for me. I have one right beside me, and it recently.
Yeah, I'm not saying that.
It changed its voice, and I was away for a month, and so I came back and I asked it the weather and had a new voice, and I swear to God, I was like, "What's going on? Who's in my house right now?"
Oh man.
So, okay, where do we jump from here? Do we want to jump on SoFi or anything else to be added on
let's do some SoFi real quick. It doesn't have to be quick, but I mean, like not as long as this segment. Let me make the timestamp just so. Okay, throw this up real quick, please. And I want to talk about this, and then Tanner/Tim's idea for SoFi as well. So, SoFi announced this week the loan platform business had expanded 3 different agreements totaling $3.6 billion. One is for $2 billion over 2 years. This is not money that SoFi is going to get right away necessarily, but it is as far as the authorizations for the loan platform business. The rest is all in the first 12 months. What I found was really interesting is based on the Q4 earnings that they had, they told us what the annual run rate is, and based on the amount that they actually have for a take rate, which is a little bit above 5%, what they would actually be able to get for net income. And I assumed that these deals would start to be, if we're going to assume like even increments over the next 12 months, so, over each quarter, and then also over the next 2 years, given where these deals break down over the next 12 to 24 months, we're looking at the remaining part of this year, this being about $100 million increase in net revenue. This also means that the net income margin, based on where they had guidance for, would be actually closer to 20%. And the EPS from this alone would increase more than 10% to 67 cents. Some people had said, hey, no, they probably baked that into guidance. And there were comments as far as them being close to deals. But this is SoFi. SoFi is ridiculously conservative, usually annoyingly conservative, as you can see with the 60 cents EPS. Even with what they're doing, they're not optimized for EPS. They're optimizing for growth and revenue. But if any of this was baked into guidance, we're talking about like 2% or something like that. So this is a meaningful increase. I thought really fantastic news. Of course, we will likely see more of this. But the biggest thing for me, Tevis, and I have a video on this too from the other day, is I won't pull up the PR here. I think I'll keep it shorter. But one of these customers is in private credit. And I was very curious about the Blue Owl situation. So Blue Owl has the largest authorization for the loan platform business. They've kind of under some issues, and there's a lot of complexity with that. I take care of that in my video. But the question on my mind, and this was the one piece from the Muddy Water short report where I thought was like, okay, I do want to know more on that, and I do have that concern as well, is if what's happening with private credit is causing not so much that Muddy Water is like, oh, there's balance sheet risk for SoFi here, and there's not. Like they're absolutely wrong on that. But is like Blue Owl going to not want that whole $5 billion? Are they not going to be able to have that? Is it going to be cut in half? Are we going to see not a slowdown, but a slowdown in the rate of increase versus what was expected for the loan platform business? And this doesn't give us like a concrete answer 100%, but this top 5, which is a new client, a new customer, a new partner, so it's not Blue Owl. So there's like I came up with 5 names because I'm like, depending on the list you look at, top 5 can mean a couple of different things. This is from that same bucket, private credit, that has the larger of these agreements, $2 billion over 2 years. Not huge, but it is large. And so the question on our mind is, well, maybe Blue Owl, because it is a different bucket, and they're looking for something other than SaaS, which is bleeding, that's going to be higher yield and more dependable and trustworthy. The loan platform business, unless you're banking on a massive recession, which probably those odds are up a little bit because of inflation, this might be a place where others land as well. And so we might actually, I'm not banking on this, I'm not counting on this, but there is a chance that a lot of the pivot is in things like the loan platform business. There are other markets and players out there, and that's to the benefit of SoFi if we see private credit make that shift. It's an if right now, but that's an early indicator. If we see another of these deals that are another new top 5, that's exactly what's happening.
There's a couple of things that I really liked about this deal specifically. I think them announcing this at this time really signals strength in a couple of areas. First of all, it shuts up Muddy Waters. Completely, it shuts up Muddy Waters because it's like, well, we're seeing continued strength in these global. Well, hold on, what was the actual quote? a leading global bank, to do business with SoFi. And if SoFi was Enron, they wouldn't be doing business with SoFi. So Muddy Waters can sit down on that front. I think number two, what it does is it validates the demand on the macro side of things. So the private credit risk and all the points that you were making on the macro. Well, if we're seeing that we have increased loan platform business with SoFi, that tells a little bit of a different story. One thing that I thought was interesting was what Anthony Noto said in maybe Q3 earnings or Q4 earnings, whereby basically he was saying with regards to the loan platform business that the SoFi, the company, is seeing a flight to quality, I think was the actual term. So a consolidation in quality businesses in such as the loan platform business and quality offerings, right? So I think that's the second piece why it's significant. I think the third piece why it's significant is because, well, the stock price is down 50% off its highs, and this is signaling an expansion of that loan platform business deal, right? Loan platform business did what? 10 billion in commitments? Yeah. Hold on, let me throw up the
the ARR is $15 billion over the next year.
Yeah, exactly, right? So SoFi's loan platform business has fee-based revenue. In 2025, the loan platform business secured over $10 billion in commitments to meet strong borrower demand. And right now, they just did new agreements for $3.6 billion. And so this is a very rapidly growing part of SoFi's offering. And it does a couple things, right? Like number one, validates the short-term thesis, short report, validates the macro, validates the growth rate of this company particularly. So let's read what Anthony Noto had to say. Adding 3 new partners to our growing network shows the unique value of our loan platform business to asset managers, institutional investors, and partners more broadly. By connecting strong borrower demand with institutional capital, we're providing capital light fee-based revenue that complements our overall lending business while leveraging our technology platform capabilities. So all around, I think it was the right press release at the right time. Didn't do anything for the stock, but no. I think it's still good news because it's a further validation of the business chugging along. And to that earlier person who asked, for some words of comfort, it's like, well, dude, you have SoFi literally giving you words of comfort to say like, hey, stock is down 50% in 3 months, but we're still doing what we've been doing when we were at 32. And even better, we're doing it faster and we're on the right track. So I think that to me was the signal that I got and nothing beyond that. I mean, we've got loan platform business expansions. I think leading global bank is really interesting terminology. Now that could be an investment bank, that could be a commercial bank, it can be something, both, but it doesn't really matter to me. Money's money, right? And this is going to reflect on the financials for 2026. And yeah, to your point, it's going to add to the bottom line. It's going to ensure that the company actually meets their targets for EPS. And ultimately, that's all we want as shareholders. The stock price can do whatever it wants. It can go in circles. And largely, it's proven over the past couple of years that it has gone in circles. But all I can ensure and all management can ensure is the fundamental execution of the underlying business, period.
Yeah. I agree with you. I mean, it's not going to shut up Muddy Waters. They're going to keep yapping until they've made all the money that they're going to get. And it does annoy me a little bit that not only do I find most, except for possibly this one argument that we talked about, wrong, they've been benefited a lot from the macro. And they're short sellers always do this. But to be fair, us longs will do this as well when our stocks are going up and to the right. In the bull market is just raging. We're like, yeah, we're geniuses. This is great. Short sellers do it too. You can be wrong and still benefit. You can be right and still get destroyed as far as returns. Over the long term, it tends to happen less. But it continues to fall. And Tanner actually posted and got a lot of traction this week. And I'm curious on your take on this, Tevis. I've seen a lot of people in the SoFi community weigh in. His idea, and if you throw this up here, is on buybacks.
Yeah, just a second. Okay. Before I throw that up, I just want to say one little thing in response to what you just said. Look, Muddy Waters can say the most outrageous BS report out there. They're making money today. You're losing money today. I'm losing money today. Muddy Waters is making money today. They're short on the company. They don't care if it goes down as a result of the articles that they're publishing. They don't care if it goes down on the merit of their research. All they care about is that it goes down. And so if the macro is the thing that's bringing SoFi down, well, I don't care. SoFi's like, if I use my money to buy a completely shit company, and by some strike, like some miracle, tomorrow they get acquired and they double up, and that says nothing about my quality as an investor, and I just got lucky. Cool. Thanks for the money. Like it doesn't matter. It's inconsequential how I got there. The result is the same. Muddy Waters is making money off the fact that SoFi is at $15.
Yeah.
Point blank. So now with that, let's lead into this.
So one of the criticisms, and I think it's fair, although it is on dilution. SoFi has, partly because of stock-based compensation, and you'll see that on most American tech companies, especially those that are newer, whether they're in fintech, whether they are pure tech, SaaS, whatever, there's a high amount of that. They've also had 2 equity raises over the last 12 months. They had one midsummer, which I thought was like, hey, wrong time. You should not have done this. And they had one December, which I was in favor of, but a lot of people were very much against that. And I think it was more because of twice. So his argument is SoFi raised $1.6 billion at the end of 2025, share price $27.50. Stock had dropped 42.3% since the last raise, actually quite a bit more now. And he asked, is it now the time to actually issue a buyback? They issued 58 million shares. They can buy back 100 million using the 1.6 billion that they raised, and kind of went through this whole thing. Also said, hey, at $16 a share, they could buy back 930 million worth, 58 million. That would erase the previous round of dilution and still pocket. Tim had some other ideas as well as far as synthetic longs through options, and also buy back a few shares as well. I think that they should wait. And the reason why I think that they should wait is they're a bank. They raise us money. The initial raise was to help offset the credit faculties, the credit warehouses. So they no longer had to use somebody else's money to do their lending. And I think that was a great move. It was the wrong time. But they did it anyway. It's water under the bridge. Now they have a whole bunch of cash. And they can use that cash as a bank in a way that most businesses cannot, where they can lend out against multiples of that cash. And I think that that's what they should do. Unless they're saying, hey, the situation has changed, let's not do consumer loans, something like that, they should use this money to grow, unless the stock price becomes absolutely stupid. And it's mispriced here. It's undervalued. I'm not saying it's not. I don't think that we're at the absolute stupid price, but I think under $11, $10, single digits, that's when it's absolutely stupid and ridiculous. And I do think they have an opportunity to buy back. If they don't, it's not going to bother me, but I would rather they wait a bit. I don't think we see single digits. I'd actually be a little bit surprised if we see 11, but we could. But that's where I stand on this. Where are you?
Conflicted, sir. That's where I am. On one hand, I want them to announce some type of backstop for the bleed, because it signals confidence in management seeing that this is actually a undervalued asset, and they want to step in, similar to how Robinhood this week increased their buyback amount, right? Because they're saying to the market, hey, this is kind of stupid and our business is worth more than this, and we're actually going to get an ROI more so than we would have gotten on any other investment that we make by just buying our own stock. So for that reason, I'm bullish on this. The other side of me says, well, like I've been preconditioned to say, well, if companies are buying back their own shares, that means that they have no better uses for that capital. Therefore, they're not a fast growing company, because they're not in the casino. They're not making bets anymore. They're just saying like, hey, this is the best thing that we could think of to use this money. And that you associate with laggards, you associate with companies that are sort of over the hill, so to speak, in terms of their growth. So I do think that there is going to be higher ROI items even though it does get more compelling the further down you go. So I agree with you on the like $11 point. But I do think that management can find higher ROI items if they spend that money. So that's the other side. Now, on that other side, I would say one more thing, and that is that I don't know that these banks would ever do business with SoFi again if SoFi went ahead and said, "Hey, you remember however much the amount was, 1 billion or whatever the amount was, um, we're just now going to use all that money for buybacks." They would feel like suckers. You would feel like a sucker if you were in that position because you bought the stock for $27 and then they're going to use your money to buy more shares at $15, right? And so you wouldn't want to do business with them again, even though it might be, financially a good move for them to buy back shares. So I do think that there is some, like, I think management should come out and say, hey, we're authorizing to buy back up until these shares. We're probably not going to execute on that unless our stock gets like really low, but we want to have the authorization as like a bullet in the chamber. If they came out and said, hey, what was the exact amount of the $27 raise? Oh, 1.6 billion. Great. We're going to buy back 1.6 billion worth of shares. You would piss off a whole bunch of the counterparties on the other side. So I don't think they should do that. But I think they should step in to signal to the market that we think we're undervalued. And it should be something from the official account, not just Anthony Noto buying shares, because that's like, it works and that's good. But I think it sends a different tone for the actual business to be like, hey, this is actually ridiculous. And it's now competing in an ROI perspective with all the things we could have actually invested on in the business inherently. The business is growing very quickly. If you layer in the invest platform and loan platform business and all of that, we actually think there's an opportunity to compound on that by buying back our own shares. So I'm kind of in the middle on this, Roy. And I know it's a non-answer, but sort of that's the pros and cons of how I'm thinking about it.
Yeah, no, I think that's fair. Yeah, and I don't, they could announce it now and just be like, hey, we're not planning to use this, but if the market gets really silly, we're going to. We just want the optionality. And that's why they did the race. I mean, they literally use that in the SEC filing of optionality being the reason. So the goal, by the way, is not, I mean, it would be nice if like, hey, this happens and then that's the low and we never see lower. Cool. But I think the real goal is like, okay, if they can actually buy back quite a bit of shares, it eliminates the argument of these guys will endlessly dilute and they're poor capital allocators. I think it takes that away. And second, like long term, like if you're buying back shares at 10, 11, $9 a share, whatever, I hope we don't see that low. But if they do, like, are we going to regret that? No, that shrinks the float quite a bit, increases and expands EPS. And it makes that raise that a lot of people were against in December look pretty smart because they were able to turn around and do this.
Yeah. And I mean, to TJ's point, it does also lower the float, right? So their financials are going to look better as a result of it. I mean, Apple's been doing that for a while. I mean, you just also mentioned it, right? So it's going to be really interesting, Roy, to see. And they have earnings coming up, right? So of course, they're not going to be asked about the stock price, but they're going to be having the ability to talk about their guidance, talk about the prospects for the rest of the year.
Yeah. Yeah, if Noto is asked about the stock price, which I don't think they will be, but in the follow-up interviews, there always are, like what Jim Cramer, CNBC, I think all he's going to say is, well, I was buying at this range, so it's pretty clear what I think about the share price.
Yeah,
that's a valid point. So
maybe I should just reach out to their team, be like, hey, can I ask you a couple more questions about no, I'm probably not.
It'd have to be after earnings, but maybe, yeah.
Of course.
All right, you want to do Q&A now?
Let's do Q&A. I have 42 questions bookmarked. So answer to the universe. But I bookmarked this actually because I want to talk about this. Dude, today, this is going to sound like the most degen thing you've heard all stream, and that's saying something. I was actually looking at what the penalties would be for paying my taxes late because I have a whole bunch of money that I've been saving up for taxes that I have to pay. And I was just like, I would rather put this into the market right now and start to pay the government back in installments. So I'm not going to do that, but these are the types of questions that I'm asking myself in this market dip. So if we dip more, It's going to be like, how much do kidneys cost in the black market?
Yeah. I just did my taxes this week. I guess it was a week ago. And it's the largest capital gains that I've ever had. And a lot of that is because Palantir gains. And
Mhm.
yeah, this year I don't know. I've not taken gains yet. Well, I have some from BG, but I think I'll probably realize more losses if the year ended right now. I don't know how it'll end, but you want to do the donations first? You have a couple of donations there from folks.
Yes, donations always come first. Thank you, Ed, for being a YouTube member.
Appreciate it.
Thank you, Highland, for the donations. All right, first donation question. If SoFi is $40 and BMNR is $50 in 2027, we just hodl. We just hodl, baby.
Yeah.
I think, because
Yeah,
well, it's going to depend on the macro too. I think
it does.
BMNR at 50. Look, guys, clip this, bookmark this. I don't care. A year from now, if and when BMNR is at $50, you're going to get people who are going to be FOMOing in, who are going to be buying that, and we're going to say BMNR is going to go to 500. You just wait and see. Even though those are the same exact people who are not buying it here at $18 because they're saying BMNR is going to go to zero. Those same exact people in that same breath, 1 year apart, are going to say BMNR is going to zero versus BMNR is going to 500, just depending on what the price of BMNR is at. That's it. It happens with every single stock. It's fear and greed in full display. All right. Golden question. When do we bottom out? Ron?
I think probably in April, same as last year, and it could be a matter of like 2 or 3 weeks.
I think we bottom out when the actual negotiations are towards the end stages, and there's a mutually agreed upon sort of structure by both parties, and whenever that happens. So,
And there is a concern, of course, that boots on the ground. This is a quagmire and everything. If that's the case, like we can fall a lot longer, even into a bear market.
Roy,
price oil and everything. So
my brother, that's the fourth time in an hour and 47 minutes that you said quagmire. We're gonna make it a drinking game if you keep going at this rate. I love it.
Sounds like a quagmire to me.
Just got everybody freaking plastered
with energy drinks.
Yeah, exactly. Okay, let's see. We have still 41 questions. Giggity. Wrong quagmire. Next question. Carl, watching my portfolio dissolve, any advice for keeping my nerve heavy in SoFi? Yeah, I would say just keep reiterating the fundamentals. Look, just do the due diligence process over again on your companies, and you'll realize that nothing has actually changed in the fundamentals. That usually helps me. The other thing is like stop looking at your portfolio, go touch grass. Roy, anything there?
Yeah, no, watching is the key word there. So if you're watching for a specific reason, like you're waiting to make a move, maybe just set alerts. Or like if you're like me, I'm an option seller, so I tend to do that on Mondays and Tuesdays, sometimes Fridays. I'll take care of business and then I'll go about my life. I watch because it's entertaining, but those days, and there are days, I'll be honest. I'm pretty stoic when it comes to investing, but there are times when I'm like bothered by the red and the relentless downturn, and this week was tough. That's when I'll just be disciplined. I'm like, I'm not going to look at it during hours. I've already made the moves that I've made. I'm in the companies that I want to be in. I don't need to look every single second and see every single tick. So if you are happy with your holding long term, you've already made the moves that you have, remove the watching part of that, and I think you'll be better off. It's one of those old axioms that the best investors are actually dead investors. Why? Because they are not governed by emotion at all.
It's a quagmire, some might call it.
Or a morass.
Dude, do you like read a thesaurus to go to sleep at night? Like, what are these words, man? I feel like so dumb all of a sudden.
I hold a PhD, sir.
Oh. Yeah, you're right. You're right.
And by the way, I got news like 20 minutes before we got on here. Confirmation that all the checks have been hit and my dissertation is ready for publication. There's still some time before they can actually publish it, but that's fun. I'll be a published author at that point.
That's I'm very proud of you. Yes, the
Thank you,
doctor.
man.
Um,
Appreciate it.
Dr. Quagmire.
But like seriously, like having things like that, like if you're getting a degree, if you have a family, if you have something that you find enjoyable, so to speak, touch grass. You don't have to be glued every single minute. If our views go down, but people like because they're not focused on the markets and everything, are better off. Great, that's awesome. And especially in the weekends when the market's closed, there's a lot of fear mongering out there, especially right now. Just enjoy your weekend. It's beautiful, unless you're in Toronto, I guess. But yeah.
If you ever interview Alex Karp, can it please be like Dr. Karp x Dr. Roy, a conversation between doctors or something like this?
Oh,
I
yes.
feel like that would be an amazing title.
I just want to talk to him one time, like even if it's not an interview. But yeah, he's neat. I've had the privilege of being not engaging directly with him, but like just watching so many of his videos and clips. Like I feel like I know him, even though I've never met him. So
I feel like if I ever talked to somebody with the personality of Alex Karp, knowing my personality, it would go off the rails real quick. We would be talking about some offside shit like 5 minutes in.
yeah.
But yeah. Sorry, missed this donation. Salutations from the DR Long VG, baby.
VG is the one thing that psychologically, like it's gained so much, and it's great. Like I'm up a lot on my leaps too. I wish I'd made the bigger position, but it's about 5% weighting before the run. Now it's like 8%, I think, in my portfolio. But and that's with taking some profits. But yeah, salutations, Dominican Republic. Want to go there one day? Had a lot of friends that have. So thank you for the donation.
Yeah. We need an AI thumbnail with Ron in a red Hawaiian shirt, name tag Dr. Quagmire. Philosophical investor will get right back with you, sir. I'm sure he'll get the message and you're going to get it. Highland Harper, thank you for becoming a YouTube member. I don't know. Is it supposed to be like Dylan Harper, but with an H? I don't know. But thank you regardless, and for the donations as well. All right. Let's we're getting BG questions. Great. Oh, and thank you for 10 gifted subs. Sir, unless you're short, this is a red market. So I don't know where you're pulling these funds from, but I appreciate it. And I'm sure the 10 gifted people also appreciate it as well.
Can you throw Jake Hill's comment up there? How often at 7:54? I do want to address that. Rarely do I, but just to clarify, in case people are wondering.
I was gonna make Jake Hill wait before.
Okay. Yeah,
but
let's make him wait. But we mark it.
I
want to address it.
All right.
And I'll be honest, exactly with what I've been given. So
I will be honest too, but Jake Hill can wait. There's 43 others in queue.
Yes, sir.
And let's see, is there any more donation questions I should bring up here? And then thank you again. Okay, back to regular questions. Back from 612. This is 2 hours ago that Dr. DS Greg asked, how about those pesky warmongers? Yeah, dude, I don't want to talk about anything like that, but like I thought it was kind of weird that you have Trump yesterday saying, hey, we're going to do a 10-day pause. And then today you have a whole bunch of bombs being dropped by the ally of Donnie. Some trouble in paradise, maybe some lost in translation. I don't know, Doctor. What do you think?
I mean, like, yeah, it's not good. War's terrible. It's tragic, and those that are hurt the most are usually people that are innocent. So, I hope it ends really quickly. I really do.
Agreed.
I'm not hopeful though.
Harmon, sorry, go ahead, Roy.
Oh no, go ahead.
Harmon asks, "What's tempting to buy right now?"
Yeah, for me, a lot more Nvidia. We just talked about it earlier.
Yeah, I think Meta, SoFi, those are both tempting from my side. Hood at 66 is definitely tempting.
It's getting there. We're almost to where I might start buying leaps. BMNR too. Like, I mean, there's so many names. If it was just the one thing that fell, yeah.
Yeah.
Yes.
Yeah. Congratulations to SoFi for opening their new headquarter in Tehran, because that's how they're trading right now. Yeah. Okay. Let's move on. A noob investor says, "Are sports cards of quality players a good hedge?" Well, that reminds us, we don't have Steven on tonight because he's at a Lakers game. I don't know if I was supposed to. I'm sure he would share it anyways. Yeah, I mean, what are some good hedges here? Oh, actually, hold on. I just got really excited for a second because I want to show you guys this post that I shared with Roy. And this post comes from John. And John says, "I think I finally solved the market." And he's looking at the tech ETF and an energy ETF and how differently they perform to one another. And basically saying go 50-50 tech energy and you're good to go.
That's awesome, actually.
I don't know how this does, back tested out 10 years, but yeah, energy is up quite a bit this year and tech is of course down. So yeah, Timothy says, "I ran out of money. I ran out of money too." That's amazing. I'm going to tweet that probably. But yeah, so hedges are good. I don't know if basketball cards are a good hedge, but at this point, I don't think you can go wrong. The only thing I'll say about things like this is like they're not very liquid assets, so it's only a good hedge if you can actually get the money out to buy other things.
Yeah, I think commodities like another place to be. Like traditionally, gold and silver they perform very weird though over the last year, and they're up quite a bit. So I don't know. Bonds are actually an option. I don't do bonds personally, at least at this stage of my life. I think later I probably will. Copper is one of those commodities that's pretty interesting from here too. So it's like the one metal that has been left in the dust, and it's a little bit weird. I don't know enough about how commodities trade, but I'm just saying like these are some things that I see people putting out there as potential hedges. Or you can just own VG to the moon. Next to the moon. No, just kidding.
Someone did a 10-year back test and it matched the QQQ returns with less drawdown. Wow.
Nice.
That's really interesting. Who was it? With Dalio, I think it was, where it was like, hey, beyond 15 names, you don't get any more diversification. Like it drops off because you have to diversify across different asset classes altogether, as opposed to diversifying across different sectors within the same asset class. Because equities get hit across the board, and so yeah, you can do like tech energy, and that diversifies you on one layer because you're diversifying across different sectors that are not complementary with one another. But then across different asset classes altogether is even better. So like gold, real estate, equities, baseball cards, whatever, is even better. Okay, let's see. I got to bookmark more questions. Holy crap, man. You guys are going to kill me.
And we'll do some rapid fire ones.
Are going to V-shape out?
The initial bounce will be, but I think it'll take a while. I think we'll see a new all-time high by after November.
YouTubers are a great source of stock ideas. Why would that be a bad thing? I don't think this was a question for us. Oh yeah, don't listen to us to make your decision. Like you can view us as entertainment, but don't view us as like your research. Don't substitute us for your research, please. This is not financial advice. We are just a couple of dudes on the internet saying
we don't know your situation. We don't know, what your time frame, anything about you. At best, use us for a starting point on further research that you do. And don't call watching other YouTubers or more videos by us research. Do your own. Pull up. Yeah, exactly. It's so important.
But Roy's a doctor. I mean,
not on this.
Yeah. And also, like, don't be afraid to ask your favorite LLM. Like, Claude has been good with helping me out of like option situations where I'm like, hey, this is what I'm trying to achieve. This is option 1, option 2, option 3. Like run the numbers for me. And then like I use it as a tool. And so I think that's how you should be using us as well. Like we're just one data point in a sea of different data points. I've been wrong probably more times than I've been right. So please, like none of this is financial advice. Don't listen to us outright, but yeah, keep watching. Figma, looking juicy, Jeff says. What's your long-term outlook on this, Roy?
If it was the only thing that fell, I'd probably own it. I like the product. I like the company. I need to know more about the business standpoint because I've not kept up with it since the IPO. And there is the question mark in my mind, like, is AI going to displace this? I don't think that it will, just because the collaborative aspect is a moat of a kind. But yeah, Tevis, you own this still?
No, I never owned it. I was interested in it. I never ended up buying it because, well, I mean, everything else is down now. But Figma, boys and girls, ladies and gentlemen, is officially at $20 per share. It fell as far down as $19.82 earlier today, I believe. Yeah, earlier today. Just broke a new all-time low. Of course, we will remember Figma as the company that IPO'd and went to $143 a share. Roy got a few shares allocated to him from Robinhood. Oh, one share. And that share can basically buy him a Big Mac combo at McDonald's.
Well, I sold it after the month, after the lockup period.
Yeah, so you're the most successful Figma investor out there, probably.
I did make some. I mean, like for one share, I made like 40% gains or something by the time I sold it. I think so. It was great.
Like, look at this, man! Holy moly! Like, let's just take a look at some of our favorite companies here, guys. Just 30 seconds, indulge me, please. Meta off a freaking cliff, as far down as 520 earlier today. This is a daily view of what that looks like. Let me just
be sure to throw up Hood there too.
All right. Here's Hood. I must have drawn this line way back, but definitely below that line now. And let's look at Microsoft. Just holy moly, just a round trip from Liberation Day, and that's where it is right now at the Liberation Day prices. Wow. Nvidia, all things considered, trading like a
I'm very thankful. Yeah, it's been holding up nice.
Yeah. I know, I don't know, I think it was Tanner that was complaining a couple of weeks ago, saying like everything in my portfolio is moving except for one. I'm sure he's thankful too right now. So everything else. What else do we want to look at, Roy?
Micron, MU.
SoFi. Here we go. Yeah, back to prices in 2024. MU. Yeah, all things considered, not that bad. Not that bad.
VG. No, I'm just messing with you.
Let's take a look at one of our favorites, Cloudflare.
Yeah,
does not
annoying.
F.
Coinbase is one to throw up. Coinbase is really interesting. What's happening for them right now?
Coinbase, again, I don't know when I drew this line. I don't even know what the fuck this line is. Oh, it's from here. So it must have been a long time when I drew this line. Yeah, Coinbase is definitely at some lows for sure. But Coinbase trades in like zigzags, man.
Throw up Webull, BOLL. Neither of us are in it, but yeah, this is something we've been in the past. Look at where it's at, man.
$4. Jeez.
It's just been a falling knife. I'm glad we got out,
I remember
after they did the equity raise.
Somewhere here, I want to say.
Rubric, RBRK.
Dude, what are these companies? RBRK?
That's a cybersecurity company. It's pretty interesting. If Cloudflare never falls, this might be the one that I actually end up buying into, but I would need to do a lot more DD on it.
Yeah, let's take a look at Amazon. That's a good point.
Yeah.
Amazon under 200 again. Like you'll see with some of these hold on here. You'll see with some of these Magnificent Seven companies, like they're down to their Liberation Day prices. Like Amazon is the last time Amazon was at 200 was like September-ish. What?
KLAR, Klarna, another IPO darling from last year, didn't do quite as well. And yeah, they're a pure buy now, pay later name.
Jesus Christ.
And they've been coming into some issues. So
Duolingo hit $90 a share, $91 a share. Wow, just brutal price act. SMCI.
Unity?
Unity was actually up on earnings yesterday. So yeah, exactly. Just a couple of dudes named Ron and Travis.
All right, let's keep going.
Strategy. What strategies? MSTR. MSTR. Yep. And then our favorite to wrap us up, BMNR. Okay.
Which, like, it's not held up well, but over the last couple of months, it's done better than I expected.
It's
If you were going to tell me everything else is going to fall off the cliff, so sometimes when names bleed out so much before, people are like, well, just wait until the market really starts tanking. But I mean, you could look at PayPal for that. PayPal has actually been holding up since the terrible cataclysmic earnings decently well.
Yeah. Can you name this shitcoin right here, Roy? It's actually the QQQ.
Yeah. Pump and dump. Wait, no.
So yeah, QQQ is down to its September levels. September
AEHR. I guess you might as well throw up Air Test Systems. It was holding up really well for a while, and the last bid, it's not been.
This is like the best company to sell options on. Like, look at these moves. It's just like $10 up or down any given day on a $30 stock. And well, I think it's time to also throw up Nebius. We love Nebius here. Down from $115, $120 to $100 a share. Well,
last one for me. Circle, CRCL.
Yep.
Another IPO darling.
Wow.
It's crazy, dude. Like, look where it's been.
This is okay. So let me zoom in with you guys here. This is February. Okay. 2 months. $49 to $135 to $93. What?
Now go back to IPO.
Yeah. 64 to 298, all the way down to 49, all the way back up to 136, and now just chilling. Wow,
dude.
Palantir. Pretty good, all things considered. Yeah. Look at this, like, what is this? The 20 day. Just did a little V shape. Anyways, all right, back to our questions. Roy is a portfolio doctor. Definitely agree with that. The show is called Fiesta Friday with Ron and Travis. Thank you, everybody, for being here. I am now seriously doubting X's numbers because there's no way we have 1,400 people here. That is absolute ridiculousness.
Yeah, I think it maybe counts those that have been there for even like 1 second, and it just adds them.
Yeah. What kind of doctor is Roy? The kind that saves your life. If you're
not that guy, no.
Okay. All right, let's continue with questions. Can you guess how many questions we have bookmarked, Roy?
42.
42 freaking questions bookmarked. We didn't make a dent in the last half hour. So what I'm going to do is I'm officially closing off questions for the rest of the show. We're only taking donation questions, no more regular questions. We cap it at 42. I'm sorry. This is for our own good. Yours, I have like three questions from you already bookmarked, Stock Talks. So any questions that were asked until this point are bookmarked. All the ones that are not, I'm sorry. Donation only questions from now on. All right, we answered Jeff's question. Carl says, what do you think of the other flavor? This is how early these questions are bookmarked, like at the start of the show.
Yeah, orange is meh, and peach is probably as good. I'd have to try them side by side with Celsius. So, yeah.
Matt asks, why are you closing questions? And I know I said I'm closing them, but I'm answering that. It's because, Matt, we take on average like 3 minutes to answer a question, and we have 40 questions. So you do the math on that. I'm starving. I need to eat some food at some point today. So that's why. What if you're holding BMNR? You're in pain, just like the rest of us.
Yeah.
Roy, you sold some VG?
So I have a small amount of shares that I kind of flip back and forth between usually Figure and VG. And actually, started doing that again. But outside of that, just 2 leaps, 20% of my leaps. It's a small leap position, so it's not massive. I've not sold any shares at all, and my shares position is, I mean, it's up nicely. I think I'm averaged like 750 or something like that across 4 portfolios. So I did a lot of buying in November, December, and January. So.
K-Dog, so John said it's not fair that I'm closing questions, that I'm hungry. And K-Dog says he crashes out. He's actually doing really well tonight. You can tell when he crashes out, it's not pretty. He's definitely talking about me, not you, dude. I am the volatile personality in this duo. BM&R back to 60 this year? Yes. Maybe.
Probably not.
Those are your 3 options. Yes, maybe, and probably not. What about Zeta? Pain, like the rest of us.
Yeah, it was pretty disrespected on news this week, but it's being caught up in this too. Really good company, really clean balance sheet. I just think there's better opportunities out there.
Yeah. I need some sushi tonight, boys. That's what I need.
Ooh,
I haven't had sushi in a month, and I definitely need to order a tray of sushi and just eat like the inner fat kid in me that I truly am. Yeah, Zeta, $14.55, down 9.5% today. Painful. Yeah. Do you I saw this thing, Roy, that Meta was going to disrupt them with the ads game, but I'm not sure.
I'm not in that space, so I didn't. I spread the headline, and that was basically it. And I'm like, I don't want to be in Meta, and
yeah. Clawman says Zeta can't get out of the teens even with good macro. That's actually false because back in November, Zeta was at $38. So, yeah. My friend owns a sushi restaurant in LA. Unfortunately, I did not go to LA this weekend. Steve asked me to join, but I didn't want to do double flights back to back like that. I might do Chicago in May for one of the meetups. So I'll definitely let you guys know. That could be interesting for me. Definitely want to do Austin. Definitely want to do Toronto. And if there's European meetups, I'm there. So, but for those of you that are in LA this weekend, let me know how the meetup goes for you. I really enjoyed seeing you guys in New York. Tevis, what do you think of SoFi Leaps for June of 2028, $15? Well, sir, I'll tell you exactly what I think of those. Because your boy, earlier this week on March 25th, bought June 2028, $18 leaps is what I bought. I paid $6.6 for these, and I could have bought them a hell of a lot cheaper if I bought them earlier today. But I didn't. I bought them 2 days ago on Wednesday. So safe to say I'm bullish. Roy, what do you think of these leaps?
Yeah, I mean, they look good to me.
There you go. And Roy's a doctor, so if he agrees, then
that one of there are PhD memes, believe it or not, but the best one that I've seen so far is now every appointment is a doctor's appointment. So,
oof, I love that, dude. Being a doctor, I would flex so hard on the doctor part. Okay, here we go. The philosophical investor has been listening, and he says, Dr. Quagmire saves the life of the bull market with your little Miami Heat Hawaiian
that's amazing
shirt. Just as that user, whoever that was, I'm sorry, I don't remember your name, asked for. This it is, Dr. Quagmire. And might I say, I am looking like the best I've ever looked in my life here. So
you're enjoying it.
This is glorious. I love this. I'm gonna like this, and I'm gonna repost this. Yeah, saves the bull market. And Haribo here, great gummy, says saving or butchering.
Yeah, that's a large incision. So
yeah, like I don't even know how this thing is awake right now, but you know what? I'll let you guys decide. I need to be eating, dude. I need to have some sushi here right now because starving. Yeah, that bull is awake. Okay, let's now.
That bull is awake. Yeah.
Yeah. Let's now carry on with our questions. I feel like Adobe is meta 2022 moment where it's going to 2 to 4x in the next 2 to 3 years. Thoughts?
I would probably say no. I'm not confident enough in Adobe either way as far as the narrative against SaaS and specific to Adobe. Seat-based revenue might be in a hard place too. I think it's further out than people are expecting, but it is coming. The thing is, as far as valuation, I could be wrong there, but like, is the market going to be confident that this idea and understanding of AI disrupting Adobe specifically is fully dispelled by that time? I don't think so. And that's going to compress the multiple.
You know what actually is in a meta 2022 moment where it's going to 2 to 4x in the next 2 to 3 years, right? Meta.
What? Oh,
like
no.
You don't think it's going to?
Well, okay, yeah, 2x. It could 2x definitely. Yes.
Yeah, $1,000 in 3 years, bro.
Yeah, no, yeah. If we were going to say 4, I'd bet against 4, but 2, yeah,
$2,000. I don't know. Tevis and Ron, Travis, please get it right. Great energy. I like you together. Thanks. Great weekend, Ron and Travis. There you go. You got it. Okay, let's move on. I think we need Roy's perspective on meta. Is it addicting or bad parenting? Yeah,
I think I shared on that. It's both. Yeah,
a little bit of both. Yeah. What about Uber? Let's see what Uber's at.
Yeah, I haven't.
$69 for Uber.
Okay. I think it's a really good company. I think it's led very well, but it's caught up in the current environment where there's a ton of opportunities. So I think there's better opportunities. Travis misspelled his name, so
don't fight me on my own show. This is embarrassing. Okay, I have a reputation to maintain. Okay, let's see. No, there's gonna be a whole. Oh wait, I'm not bookmarking questions anymore. What am I doing? Sorry.
Yeah.
Sorry. Wish I could answer those, guys. Should have had Roy in a Pope outfit. He is in a Pope outfit. Look at half of his freaking thumbnails on BMNR. He's literally in a Pope outfit. Such a stupid lawsuit. Everything can be addicting. Are we going to take Coca-Cola to court as people are addicted to that too? Absolutely. Look, I think. Yeah, I mean, I'm not surprised. I think part of this is because I think somebody else asked this around Meta. Yeah, how does Meta attract more lawsuits than the Hub? I don't know, Roy, if you understand that reference, but
yeah, I know that one.
Talking. Okay.
I mean, like, even if you do not go into that sort of thing, like that is ubiquitous enough that I know what that is. Yeah, we've even talked about it before. Like that it's the amount of money supposedly that they're. What was it, them or the other one? I can't remember, but yeah, I only know like I know of the OF one too, just because like I've never used it. I'll never go there, but yeah.
He's a doctor. He knows of that one. Okay. He doesn't know it personally. It's secondhand accountings. Look, I think the difference between these lawsuits is because this Meta lawsuit involves kids, and because they're underage, the idea there is that the company is being taking advantage of the fact that they can't make adult decisions. It's the same reason you can't go to war until a certain age, or you can't drink until a certain age. And so I think that's the main argument here, that the company should have some type of responsibility over the media that it shows to individuals that are underage. as an adult, you can do whatever the hell you want as long as it's within your legal sort of boundaries. Like, don't go out and kill people, but because that breaks the law. But other than that, if it's legal, you can stay on TikTok for 18 hours a day if you wanted to, and nobody's gonna like sue you. I mean, people have sued Starbucks for saying the coffee cup is too hot, and that's why they have to write it down. But the point is like, you're an adult. You should have some type of accountability for your actions. But if you're 10 years old, good luck having that, because you physically don't, like, your brain hasn't developed yet to have that level of judgment. So I think that's the foundation for a lawsuit. But I haven't like read this lawsuit in depth to know what they're actually saying. But I imagine because the individual was like, I got addicted on Facebook or Meta from a young age, that like the age component is a big deal in the lawsuit specifically.
And there's political ramifications, right? The censorship stuff that happened in COVID, it's a social media platform, and so a lot of advertising that relates to politics, it's all a factor. And Zuck, I mean, he's invited some of himself just from some oddities.
Yeah. Maybe they need a disclaimer. Honestly, that might be the result of what's going to happen. As this lawsuit, they're just going to have a disclaimer that says like, hey, caution, this cup may be hot. And if you burn yourself, it's like, well, we told you. What does Teva say about Uber? Sorry, I didn't answer that. I know only Roy answered it. I would echo those same points. I mean, I think it's a good company. I think they're going to be okay. I know that they're partnering across the board. I know that they're sort of leaning into the robotaxi narrative to some degree, which is good. I mean, I want to see it. I don't want them to just wait around in order to be disrupted. I've never really looked that deep into the company. I use the product like all the time. But beyond that, I don't really have any like educated thoughts on Uber. So, okay. Is Meta a buy? Yes. SoFi is a better buy. Amazon under 200? Yes.
We're there. Yeah.
Let's worry about the first part, okay, before we worry about the second part. If I got a phone call right now from somebody who, like, if I got a phone call from Donnie right now and he said, hey, one condition, you got to be Travis. I'm like, what do I sign? I'll be Travis legally tomorrow, right now. But yeah, let's worry about the first part. Roy, do you think a U.S. citizen like yourself throwing out taco term would undermine the president's legitimacy and thus his ability to navigate our country through hard times? Good luck with that. Roy?
My loyalty is not to the president, but the United States of America. And I know, especially if someone's living overseas, probably you don't have a hard time differentiating, but maybe in some parts of the world you would. The president is supposed to be a figurehead. He is the leader of the nation, but he is an elected official. And we live in the land where we have the First Amendment rights, and including in the First Amendment rights, we have the right to freedom of speech, which means not only can we disagree, but we can voice our disagreements, even in disagreeable ways. So I think he was absolutely wrong to go into Iran. I was expecting this was going to be a bigger mess than what they were initially thinking, and I was absolutely right on that front. It causes massive pain, not just here in the United States, which it certainly does, and it will the longer this goes on, but also in many other poor places in the world who are hit the worst. And so, yes, I will absolutely criticize him. I will also say, the only time that I voted for Trump was this year. So, yes, I voted for him, but it's like stocks. I'm an honest guy that if I think that there's great things that's happening in a stock, I'll say those. But even if I'm a shareholder and I'm negative on something, and I think it's material and important, I will also share that as well. So here I'm like, hey, this was an absolute mistake, and I hope that the damage is not too much, too sustaining, and too long. And I like tacos.
Bro, you were like, I would honestly vote for Roy. Like, that was, he didn't dodge the question. He answered it concisely in a very grounded way. And yeah, I think you need to run. I can't run, but I think you should run.
Probably will never happen, but yeah, that's I think that's actually I have the best job in the world, and to go from that to like being the president of the United States, I think that's the worst job or one of the worst jobs in the world. If you're not corrupt and sketchy and everything, like if you're an honest person, like it's gonna war against your soul every single day. And oh man, I don't know.
I mean, look, man, here's what I'll say. I'm not saying president, but at least run for like a congressperson. And you're running in Texas too? Dude, it's like
Yeah.
God, guns, and ban Facebook, and you've got the vote right there. You know?
Yes, pretty much.
All right, let's move on. Yes, I know I'm answering some questions after the cutoff. I'm not perfect. You're not perfect. Like, get over it.
It's Fiesta Friday.
It's
Enjoy
Fiesta
a taco and
Friday.
chill.
Tevis, do you ever roll covered calls down and in? What? Down and in.
So in other words, instead of getting out or rolling it up, it's the opposite. So you're saying your covered call that you sold is up a lot. So rather than just closing it, you actually say, okay, let me go ahead and reduce the time frame if you're further out, or lower the amount, and then that pays you. And so that's what they're asking.
No, I just closed them. No, I don't. I never rolled them down. I don't think I've ever rolled down and in.
Yeah.
I don't know why you would do that other than like versus just closing it. Like, okay, I wrote an error $50 call for April 10th. This was an actual thing that I did on Wednesday. I closed it today for 50% profit. Why would I roll that down to 40 and then to next week? Like, I could just close it. I guess if I want to still be in the call.
Yeah.
I don't know. Anyway, it's a good thought. It's a good thought. Probably more sophisticated than how I'm thinking right now. I just very caveman. Just close. Okay, let's see. Ron and Travis card. I don't think I can run, guys. I'm not from the. I think I have to be born there, right? I can't even run for any government office if I wasn't born there.
You can, just not the president.
Oh,
I believe a Congress member or a senator can be foreign born.
Oh.
I think Congress for sure. Double check me on Senate.
I can run for governor.
You can, yeah, and mayor, school board, utility board.
Yes, unfortunately, I am in Canada. Well, I mean, sure, I'm in Canada right now because I could have been in Argentina, unfortunately. Yeah, Arnold was governor. Arnold ran for more than governor, didn't he? He ran for
No.
Right, just governor.
He
Okay.
cannot be president. Much the same as Elon cannot.
Yeah. Yeah. This is exactly how Ron loses his Texas vote. Okay. I can't. I don't want to sabotage my guy. All right. Was there a reason that you're not interested in Meta, Roy? I'm sure you've mentioned it before. Yeah.
Yeah, we touched on it, but just social media impact on young people.
Anyone notice Shift 4's downward momentum looks interesting?
It had that really good day. Whoa.
All right, hold on.
That's weird.
I need to pull out the Weeble now. Given that reaction.
Yeah, pull it up.
What's their 4, right?
FOUR, yep.
Well, FOUR too.
So it had one day where it was up over 20% and there was no news. It was the weirdest thing.
Yeah.
And I don't think anything was found from that. And it's not quite retraced, but it certainly has been pulled back quite a bit. Another day like it had today, and it'll be back to its lows. But I mean, a lot of payments names and a lot of their stocks are in the same bucket too. So, but yeah, 4 is a great company. I like them. I've even swing traded them before and did well in it. But yeah, lots of opportunities. And it is an ugly chart.
Yeah. Yeah, I have no thoughts on Shift 4. Met a lot of Canadians on a cruise, best people ever, totally open-minded and well-educated. You know what I should do? I should start a new series where I go on blind dates with people that the subscribers and the viewers set me up with, and then I do like a reality TV show. Like, I'm sure there is a reality TV show like 90 Day Fiance or something, but it's just me and my personality, and I'm trying to get a green card, and it's people that the chat sets me up with. I feel like people
Wow,
would
that's great.
watch that. I feel like people would definitely watch that. And it's just like there's a challenge, and I have to get the paper, and it's like a whole thing. I feel like that would be a show. And like maybe it's people that like I don't really want to be on this date with. So like I have like a confessional booth. It's like, hey, how bad do I want these paperworks? It's gonna be. I'm thinking about it now. Like my
All right.
content creator brain is going off. Anyways, neither here nor there. Let's move on to our next question. Yeah, instead of the bastard of the immigrant.
There you go. Oh man, how is this not already a show? It probably is.
Yeah, and you guys thought it would be a good idea to take financial advice from us. That's on you guys. That's on you. Have you seen this show? Bananas. All right, next question. You don't think the SMCI fallout will affect NVIDIA? Question mark.
Well, it should affect it positively, but I don't think it will because it really illustrates the extreme demand that NVIDIA product has and carries. It's not AMD processors that they're smuggling into China. It's NVIDIA by the billions.
Yeah. Yeah. It's if somebody's running a fraud and they're using your product, that's some serious value.
You made it.
Yes.
Yeah.
Yeah, Golden Card Immigration Show, Travis Love Boat. I love my audience, man. I love these people. I would pay to watch it. Hey there. We could monetize this. What's my Nebius average per share? Unfortunately, you did not meet the question cutoff, so I can't answer this for you.
Unless you pay the man.
Unless you donate, I cannot answer you. But it's
or just ask on actually Monday. We're going to be moving bootleg to Monday this week because of scheduling conflicts. So.
We are, and it's also like $81. So there you go. You don't have to donate anything if you don't want to. My new show is going to make me rich and famous, and with the green card. So
that's right. Win-win.
Yeah, exactly. Nebius or NVIDIA. Wow, that's really good timing.
Man, yes. I'm going to punt. They're both very attractive, and I do need more at Nebius.
I would say Nebius if you want higher upside with more risk, and NVIDIA if you want lower upside with less risk.
If you're an option seller, Nebius.
Yes. Yeah, easily. Nebius has made me more in options than anything else, and it's not even funny. Like more than HIMS, and HIMS made me a lot in premiums. I did buy a little bit of BMNR. I bought like 100 shares today, but I'm not going to like go around and advertising 100 shares. But yeah, I think BMNR is in a great position too. On today's prices, buy the Mag 7. Okay, we actually did this question. Roy, if Teradyne drops into the 260
performers this year.
Drops in 270, would you consider it? They're essentially the ASML for testing chips, and everyone is using them. Seems like a no-brainer ad.
Yeah, I would say a little bit less as far as a moat than ASML. Advantest is also like huge and significant. They are positioned a little bit differently, but yes, Teradyne, really good company. Just like Air Test Systems, which is very niche in that space. Teradyne is one of two giants. It's the one that's most successful for us. I would be interested. I don't know if it would be that price. But yes, I agree. There is a price, like even probably right here, even though it's up still quite a bit this year. Long term, you're probably good, but yeah, I'd wait for it to fall. I just don't know where. I have to file that away though. I need to add that to the closely watched list. Thank you.
Yeah, I'm not firing shots at Steve, guys. Steve advertises 100 shares of NVIDIA and 100 shares of Meta. Like I'm not like 100 shares of BMNR is $1,800. Okay, Steve posts for 17 grand for his 100 shares. All right, it's very different 100 shares. Genuine question here: if robotics and AI are as huge as we believe, what happens to the third world countries? USA won't be buying cheap goods if we can make it here now cheaper.
I don't think so. robotics will eventually be used everywhere around the world, and then even off this world as well. But the other side of the robotics part, we have to figure out, as far as what it'll do for employment. That's a different question, but it will absolutely cause the economy to boom. It will absolutely expand GDP, and I think that we're going to be the primary initial beneficiaries. And so you're going to see a lot more discretionary income for people. What happens then? They buy stuff. And so third world, I think we'll actually be able to move and advanced uh, to the point where infrastructure and lives and livelihoods is a lot better as a result of this. Um, and they won't have to just be the third world forever. I mean, they don't want to be.
Yeah. Look, there's so many offside comments that I want to bring up. I guess they're on screen anyways, but
Yeah.
what I will say is we should have an indication of how robotics is going to affect the economy with AI, because in the way that AI affects the white collar workers from a software layer, we're going to see the repercussions of that much sooner than we will see the way that robotics affects blue collar workers. Okay. And the way that they disrupt the economy is going to be the same. It's just going to have a different timeline. AI is here today. And in 6 months, 12 months, 18 months, AI is going to start in a big way disrupting the economy for white collar. It's already started, but it's going to continue as AI continues to accelerate. And by the time that white collar is already disrupted from software, we're not even going to see the first robot in the assembly line. It's going to happen much sooner. But that's going to dictate for us what the playbook is for when robotics are out and how that's going to do similar to what AI did for white collar to blue collar now. So that's my answer to that question.
And real quick, like not quite related, but I actually read a really interesting article the other day on the primary beneficiaries of AI, at least as far as LLMs. And the argument is like, yeah, there's beneficiaries across the board, but the third world might actually benefit more than anything, just because you're in a country where access to education, access to the internet, access to information that's in your language is pretty limited. To with the device that everybody has around the world, I mean, a lot of people, even in third world areas, where they can instantly access the sum of human knowledge, not only through the internet, but have an LLM tell them that and explain things that are not in their language in their own language. That is a huge unlock.
Yeah. Beast Monkey says, you guys are still on. I went to the gym and came back. Yeah, I wish I could go to the gym and eat, but you guys keep asking me questions and get mad at me for not bookmarking them. So, yeah.
You get those gains any way you can, though.
Are you just in breaking news? No way. This is not true. The White House. Okay, hold on. I gotta bring this up.
Oh,
The White House launches Only Farms, a government policy platform for farmers. This is the Polymarket. There's no way this is true, right?
I'm not going to put that in my browser because yeah.
Yeah. Fiesta Friday, baby. Okay, let's move on. Next question. We only have 20 left. What are you selling a kidney for? SoFi at 12, Hood at 40, Meta at 300. Meta at 300, I feel like is a better deal.
Hood at 40.
Yeah. Okay. I'm going Meta at 300. That's probably what SoFi at 12. Dude, SoFi can hit 12 in like 2 days. At the rate that it's going, it's not that big of a deal. We've been there. I've been like we've seen SoFi at 6 for like 2 years. Meta at 300. I like that. How would you stack rank them? Because I would put Hood at 42nd.
Well, Meta has to be at bottom for me. So Robinhood first.
Ethical concerns aside, just as a valuation.
Probably that order still too.
All right.
The lawsuit overhang, like, is it going to see? Are they actually going to see more?
Is it
like,
going to?
That would be my concern here. Versus SoFi has so many near-term catalysts, even still. So,
yeah.
But I guess if I have to hold it for 10 years, that's a harder, probably Meta. But if we're talking like 2 years or 1 year or something.
Yeah, exactly. $12 for a kidney sounds pretty freaking cheap. I might take some black market kidney
That's
right
great.
there. Add context. Is this a buy and hold for 5 years? Oh, I guess. Yeah, the tier list.
So
I don't know, Thomas. Go ahead.
yeah, that's how we had it. Going back to the previous question, I have a family member, and I won't say who, that has some is in this field. They need to know this. They're not a black marketer. They're the opposite side as far as some law enforcement thing. I think that's the most I can say. But they received some training a while ago on the dark web,
Okay.
and like even they're like, hey, let me share like what the going rate is for all these different body parts, and it's surprisingly inexpensive. So
Yeah, kidneys like what, $3,000, $4,000?
it was something like that. Yeah,
Don't ask me how I know
it's
that.
horrifying, but yeah, it
Yeah, just
exists.
think they're that expensive. Anyways, okay, let's. When is DJ Travis putting out videos on how to use leverage and margin? Dude, I don't think I know how to use leverage and margin correctly. Like, I'm not in a point to put out videos on this stuff. I'm learning as I go along. And here's a funny thing. It's like, you guys have seen the evolution of my strategy in real time. If you've been a viewer of the channel for a while, it's because I remember at some point I was trying out like dividend trading, and I did that for a while. And then TJ came on. He's like, "Oh, you got to run the wheel," and I'm like, "Really? You can do this?" And then I started doing it, and now it's like gone all the way to this other side. So I'm definitely not an expert. I'm just learning alongside you guys.
I could do one though, and it would be about 30 seconds long, and it would say "don't."
Yeah. Yeah. Um, yeah. I remember Unflappable. I remember when TJ said that because I was writing Tesla covered calls at an 8 delta, and TJ was like, dude, like, you got to get some more action than that. And then guess what? I had my Tesla shares called away because Tesla, uh, Trump won the election, and Tesla just skyrocketed.
Yeah.
How fun was that? I was in Korea, I think, or Japan when that happened. What companies went? Oh, sorry. Sorry, I gotta go back to our normal queue. What is Meta creating in 5 years? Glasses. Okay, so let me say to this: I have the Meta glasses. I had them on this trip. Those things are amazing. I love them. You can hear music or listen to a podcast or something. Literally, you could be standing right beside me and you wouldn't hear the music. It's crazy. It's so like I'm literally listening to music as I walk down the street, and people can't hear me. Not to mention that it's kind of like it's pretty cool. Like I can take videos.
Oh,
I was live streaming with my family while I was walking down the streets of Argentina, and they could see what I see with like minimal latency lag or anything.
yeah, I think they're cool. I really do. That's like I'm not like so anti-meta that I wouldn't get something like that at some point. But yeah, beyond that, like if there is a company that creates the metaverse, that's going to be Meta, like it is. They're very far ahead. They need to get AI right, and they have not. But if they do, they're going to create a lot.
Yeah. Okay, we've been on for 2 hours and 43 minutes. Jesse says you guys are still live, 24-hour stream. No, I got to eat, and it's 8:45 right now. So we're going to stay until 9, 15 more minutes, and that's it. Okay? Roy, does that sound good?
That sounds good.
15 minutes, and that's it. I don't care if I stop you guys halfway through your questions. I didn't use it for translations, but I hear it's really good for that as well. Okay. Can you ask if SoFi is done? It's probably not
yet.
Yeah. Are the Mag 7 going to be the same in 5 years? Probably not. Who's going to get kicked out of the Mag 7?
I mean, it could be Tesla if things don't go well. That's the biggest risk. Microsoft has a very small chance. I think it's less than 1%. But if there's a massive disruption for seat-based revenue and software because of AI, it's very unlikely. I don't think it's even credible. But if people are saying that, if they're right, it could be out. Meta, if AI does not go well, there's lawsuits or something along those kinds. Google actually could, if an administration actually comes and it breaks them up and says, okay, YouTube cannot be a part of Google, which cannot be a part of, who knows? Like, that's the biggest risk for them. I think Nvidia is the one that, like, I just don't see it out of the Meg 7 period. And probably Apple, despite me having it lowest down, like, they're not a stable coin, but they are very stable. I think at some point in the next 10 years, they will be in decline, but it's going to be a long, slow decline. It's going to be like the bunny course on the ski slope.
I love how you just did the entire Mag 7. But yeah. Also, I want to say a big thank you to my patron for this stream. Highland Harper 2163 has donated 3 times and 10 subs in addition to becoming a sub himself or herself. Very much thank you. Yeah.
And if you are a female that's American, just slide into his DM. So
it's it's better than $20. If you can get a kidney for 12, you can get a husband for 20. That's what I always say. Yeah, you guys are still live. We are still live, and I am definitely looking for some sushi after. Sorry. Okay. Here we go. Question for Tevis: do you speak a second language? If yes, what language would that be? Please say a few sentences. I'm not going to say a few sentences. I speak 2 other languages in addition to English.
Fluent?
Yeah, fluent enough. Yeah. Okay. One of my other languages is like my mother tongue, and then the other one's Spanish.
Yeah. Okay.
So.
Wow, you might know better Spanish than I do then.
Well, I was just in Spanish-speaking countries for a month, and I didn't have to use the meta translations. Although, what I will say is in Uruguay and obviously in Chile, the accents were pretty difficult. It was like another language. Also in Argentina, man, they have very thick accents as well. So, yeah, 3 languages for your boy. Spanish is my worst language in terms of communicating, but I can definitely, have a conversation about pretty much most things. Sí, puedo hablar español y si quieres podemos hablar juntos. Okay? There you go. That's 1 sentence in Spanish. Roy speaks Spanish, Roy speaks Russian, Roy speaks English, Roy speaks sarcasm, and those are his languages. Yeah, I speak Dijanese as well. All right. You guys are not going to know my 3rd language. It is an Eastern European country where I was born and where I lived for a good chunk of time.
Yeah, I know a couple of dead languages too, but
yeah. Latin.
Not well. I did take 1 class in Latin, but I don't really know that one. Probably know like 40 or 50 words.
Do you speak you do like the Duolingo for like Dothraki or like Klingon or whatever?
No, Greek and Hebrew. So
oh, yeah, I mean Greek's not dead. I mean neither is Hebrew.
Greek is, man, it's super useful. Hebrew less so, but it was a fun thing.
Yeah,
it's so backwards.
It was Turkey, yeah, for sure. Okay, let's move on. I'll let the people keep guessing at what my other language is. I haven't really shared it. I mean, Bob already knows, and there's a couple of people that already know because they've been watchers of the channel. And if you're not, you don't know. What are your penalties if you pay your taxes late in Canada and put it into the stock market instead? What did you find in your? Yeah, so basically you pay like a monthly sort of penalty. I believe it's also like a percentage of what you're supposed to pay is added on top. It's like the same as like if you'd like take a loan out of the bank. I know it depends, right? Because it's different for personal taxes versus your corporate taxes. But yeah, it's like a percent. It's like taking out a loan basically, which is crazy because the government doesn't give me a percentage whenever they're late with my tax returns. But they have guns and I don't, so sorry. Something about the forefathers, tyranny, and all that. Anyways, what stock do you think has the best chance to double this year, Ron?
Well, let me say if the Hormuz situation lasts like 6 months plus, that's going to be VG. They benefit disproportionately more than any other energy company from this, than any other LNG company as well, because where they're at right now with their commissioning cargoes and those that are trading above the nameplate, they can actually sell more at the spot market than anybody else. And so the spread between TTF and Henry Hub is only actually getting wider. It moves around a bit. So 6 months out, like it's not even like priced in where it should be, frankly, right now. So that one could easily double. Wouldn't even take 6 months. Like if we're still in this conflict, like 2.5, 3 months out, VG is going to probably be trading around 35. But if that's not the case, and Trump and everything gets resolved here in the next few weeks, maybe SoFi. Lots of catalysts still.
I would say Hood is easier double than SoFi. SoFi to go to 30 or Hood to go to 120.
So, like the thing with Robinhood is, are we meaningfully out of the mini crypto winter or the crypto winter before then? And I think maybe we'll see that around October or November, maybe, but it might go longer. And if we do, I don't think Robinhood will be there.
Yeah. Highland Harper, another 10 gifted subs. Please, guys, share the love with Roy as well. I know last week it was like the opposite. Roy got all the donations.
It was.
But thank you so much. I really appreciate. Very generous, and congratulations to everybody who just got a new subscription. I honestly should make some subscriber videos this week, and I'm in like a good mood. I need to make more content. I feel energized, man. It's so crazy what like a month of sun will do to your psyche. I came back and it was just all like gloomy. It's
maybe do some personal stuff, just like share some of the highlights of your vacation or
something. Ooh, some of the stuff that I'm building with Claude, dude. I'm having so much fun.
That too. Yeah.
I'm having so much fun. Yeah. So I guess because of you, Highland, I will commit to doing one subscriber only video this weekend. So I'll add that to the list. Okay, let's continue. I don't understand why you would invest in BMNR over ETH. Isn't it practically? Look, what I will say is like every week, BMNR decouples more and more from just Ethereum. And the reason why is because they make more moonshot investments as well. Orbs, Mr. Beast, and now like them acquiring this other company to be a validator network with Maven. Like they're making moves. They're investing their money in such a way that will differentiate them from just the ETH that they actually hold underlying. Can we set a bingo card for Trump live streams? Only if there's shots involved, and Quagmire is one of the options. DS Greg, thank you for becoming a YouTube member. Appreciate that. You will also get to see what the video is this weekend. And thanks everybody for the support. I mean, the stream's going on 3 hours. Really, really appreciate it. Yeah. SoFi Sloth is feeling the pain just like the rest of us are. What should he do about it? I'm sure we've answered this question before. Dr. Ron says ignore the lump and hope it goes away. So, next question. I see Roy's eyes darting.
This week I had sold some 20s and not even on my entire position, because if this continues, I don't even want to sell the shares like below 25. I initially had said I was going to wait till 20 to take any gains on the leaps. The leaps are only 10, so it's not like a massive amount. The shares are a lot more, but probably at 20-ish, that's all my leaps. And I probably should do some poor man's covered calls, honestly, on them.
Yep.
For some reason, I thought about that, and then I forgot. So, Shares, I'm going to be careful with leaps just because we can see how explosive VG is. Yeah.
Yeah. Let's move on. How often? Oh, this is the question you wanted to answer 2.5 hours ago. How often are content creators paid by the companies that they're promoting? So I don't have any paid promos, nothing. I make money completely on ad revenue. I've never taken a partnership. I'm not against it, but have you guys heard me before? Nobody wants to fucking partner with me. Roy, Tanner, and them can speak to this because they have actual partnerships.
Yeah, so I've only ever had one, and it's not with a company that is traded publicly. It's Fiscal AI. And the reason why I only have one is not because I've only had one offer. I get multiple offers every single day. I had one actually today to do kind of what this guy is saying, and it does happen.
Mhm.
And I'm a small creator. I mean, look at the number of subscribers and everything. It's 12 or 13,000. I'm not massive.
Yeah.
But thank you guys for those that have subscribed. But they were offering $2,000 for a one-time like 10-minute video on one of these little names. And
Yeah.
I didn't even respond. I'm not going to. It's not it's they could be offering 20,000 or 200,000. My integrity I value too highly to sell. So doesn't mean I don't get things right. It doesn't mean I'm not going to ever but if I ever I don't think that I'd ever do like let me talk about the stock because I'm paid to. But to promote good companies, like Fiscal AI, I think is great. So, like if Monster Energy Drink, they don't do this, but if they wanted to sponsor a YouTuber, I'll take it, man. I love Monster. So, but if I'm like, if it's some weird thing that I don't believe in, I'm not gonna ever. There's no amount of money.
Yeah, I think. Okay, so I want to spend a moment on this. Yes, I get offers all the time, similar to Roy. I'll tell you what the offers are. So money wise, they make sense. Like $2,000, $3,000 for a video, absolutely. But here's what it is: it's microcap mining companies, gold mining, silver, whatever. It's companies that have a whole bunch of like insider activity, and they're super super small. And generally speaking, them being promoted by a YouTuber is going to do good things for their stock because it can actually move because it's like $100 million market cap. It's crypto companies, a ton of crypto miners, crypto exchanges, foreign crypto exchanges. So yeah, those are generally speaking the types of companies I get. I've gotten offers from Mumu. I haven't partnered with them. I actually got Kalshi recently, which is like the
Oh,
most
nice.
legit
That
company.
would fit you. That would fit you well.
Well, I don't have access to Kalshi, so it's like, why would I do a Kalshi partnership if I can't even access the app? But maybe, Seeking Alpha, I've gotten before. I haven't partnered with them because generally speaking, they operate off of like affiliates. So like, I get money only when I sign people up, and I don't use it as a product. So it's like, well, I don't. So what else? But yeah, it's like mostly small names that you guys know about or other people have talked about in their videos. I would love Fiscal. I would love, what was the other one that Tanner got? It's the other platform. No, Ben, name it. It's the other platform.
I know we had Moo.
No, Koifin. I would love Koifin. I would love Fiscal. Like any of these legit companies, I would love Robinhood or SoFi. I mean, I don't know why SoFi doesn't, do any sponsorships, but like they got Graham Stephan recently. They got him this week. Webull has offered. I have gotten calls from Webull. I didn't want to, get involved there. So, look, what I will say is that generally speaking, this for me and for Roy is something that we do for fun on the side. It's a passion project. I mean, we wouldn't be. Dude, this live stream is going to make $20 for us. We've been on for 3 hours.
That's Canadian for him.
Yeah, exactly. I'm losing my voice, and this live stream won't pay for the sushi tonight. If it wasn't for Highlands donations, this live stream would make negligible amount of money. They just don't make money. They don't make money.
Yeah.
And
And
so
yeah, like some videos do well and everything, and I won't say like what I'm getting is pocket change, but yeah, the sponsorship from Fiscal is very good. The only other one that I considered, Moo Moo's reached out to. I think they reach out to everybody, maybe at some point. But I'm like, man, I invested in Robinhood. Like, I don't know if I want to even do that. But Trend Spider was one, and I'm like,
Trend
I
Spider,
like Trend Spider. But like they reached out, I think a month after Fiscal sponsored me, and like it's not an exclusive, but I'm like, I don't want to. I want to fill this out, go slowly. I don't want to do anything that's going to distract from what I'm trying to build at the channel. But yeah, it's a hobby that pays a little bit, and that's really nice. That's how I regard it.
yeah, I mean, like it sounds like look, K Dog, you have 1,000 people plus on your Twitter. Like, dude, let me literally share with you because it's Friday and we just got paid. This is Twitter, okay? Last 2 weeks. It's not, it's not life-changing money. Go through my tweets, look at what they get in terms of the actual attention. I get millions of impressions, but at the end of the day, it's not like crazy. Like this is very much a game out of passion and out of desire. And if I didn't have a full-time job, I would be like really struggling if I actually lived in North America doing content. And you can get to a point where you can actually afford it and you actually make it could be very lucrative. I'm not at that point. And I think that's why a lot of creators do brand deals and partnerships and stuff because it supplements a lot of what ad revenue is lacking. So
yeah, I made $59.10 on X. So
there you go. There you go. So I hope that transparency is well received. It's now 9:03. So we've actually 3 minutes over what we said we were going to do. There is 7 questions left. What do you think, Roy? It's your call.
Let's go through it real quick. 1 minute per question at most.
Yeah, so bootleg is going to be on Monday this week, not Tuesday, guys. And we really appreciate you guys as well. Everybody who spends your Friday night here with us, it's very much appreciated. Okay, we're going to go through the last 6 questions that we have. I know we said we'd end at 9, but let's go. What are the chances Muddy will sue SoFi for addictive finance products? Near zero. Thank you for
Dave Ramsey, maybe, but
any thoughts on Micron? I know Roy's
I like it and I own it. It's undervalued.
As a fellow Canadian, what's the best brokerage to trade options? It depends what you want to do. Wealthsimple just rolled out free options trading, which is amazing. They'll make money on the conversion fees from Canadian to US dollars, but and I think it also depends on how much money you have in the account. I think it's like over 100K is like free options trading. My main option account, I use Interactive Brokers. They charge you for options, of course, like you have fees, but I generally get way better fills. Like, so for example, today, just real quick, I did a trade on Interactive Brokers and I got a fill that was better than my limit. So like if I say, oh, I want to pay 150 for my SoFi contract, I got filled at 151, for example. There's times where like I've accidentally put the wrong number because I thought I was doing something and I was doing something else. And I got filled pretty close to what the market was. So like if I say like, oh, I'll take 150 and it's actually trading for 450 because I picked the wrong strike, they'll fill me at like 450. Wealthsimple, on the other hand, is free from a fee perspective, but like I accidentally closed my air covered call and Wealthsimple said 50 cents was the price. But what happened was I hadn't refreshed the page or hadn't updated and I put 50 cents and it was actually at 43 cents and it filled me at 50 cents. And so I was just like, dude, why? So
yeah, that's not fun.
That's my personal experience. I use both. Any view on European stocks, ASML, Adyen, Games Workshop? Yeah, there's this one European company that I really like. It's called Nebius.
ASML, quite the moat. So I see the appeal there. Adyen, they're extremely good payment service processor. So hard to bet against them. Like if you're long term, I think that's a great place to be. Both are managed very well. I know nothing about Games Workshop. Nothing.
Okay. Second last question, Stock Talks. What stock do you think has the best chance to double this year? Okay, we already answered that. It's just a repeat. Last question, Patrick says, what happens when the prediction market companies get sued for causing losses in portfolios? It's like saying what happens when brokers get sued for causing losses. Nothing.
Yeah, nothing.
Okay. Thank you all. Yeah, Novo is also European, really good, going down. Sure. Highland Harper, thank you. I don't know what to say. Appreciate it very much. I have Questrade on another account. I just didn't like them. They have higher fees, was my experience, and they have a shittier experience with UX. I know they did a rebrand and they did a mobile app and whatever, but like I don't like them personally. Thank you all. Happy weekend. I have a lot of videos to film for you. I gotta get my food in first. I don't know what this question is, Timothy, but how about you ask it and we'll just answer it really quickly.
Yeah, sounds
good. Best I can do. Again, Bootleg Weekly is on a Monday. Monday at 6 p.m. Let me actually change it here on my calendar so that I don't forget. Is Bootleg Weekly. And I'm sure we're going to have enough. We have actually a list of news for Bootleg that we want to cover on Monday. Timothy, you have 10 seconds. Ask your question. Ricardo, 5 Crossroads membership. Thank you very much.
Thank you, Ricardo.
6 p.m. on Monday. Okay. Take it or leave it, Timothy. I'm sorry. We tried. He's probably like furiously typing.
Yeah. Tag me on X if you're there.
Yeah. Take callers. That's a recipe for disaster because people will come on here and they'll say like crazy shit, and it's actually like live. It's not a delay.
Well, so Amit was doing that. It was like 4 years ago. Yep. I followed Amit when he was like 1,000 people on YouTube. Anyway, he started doing this, and I was like, okay, well, I've never done this sort of thing before, but let me hop on one of those. That was my first exposure to content creation and interacting with him, and we got to know each other through that. So that's fun.
A star is born. Yeah, there is no Stock Market Unfiltered show tonight because we have no Steve, and you've listened to us for 3 hours. Wrapping it there. Sorry, Timothy. Thank you so much, everybody, for watching and supporting the channels. And we will see you on Monday at 6 p.m. for the Bootleg Weekly. Have a great weekend. Try not to think about the market. Touch grass, and see you then. Goodbye.